But
Great. Good evening, everyone. Welcome to the Fairfield Board of Finance first quarter 2013 quarterly review. Would everyone please rise? We had some sad news in the town this week. Dr. Title unfortunately lost his father. I've got some familiarity with those feelings in the last year. His dad was a West Point grad, so I think it's perfectly appropriate that we ask him to come up and lead us in the pledge.
Allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
All right, I'm going to ask everybody to observe a moment of silence. We had two deaths this week relatively close to this board. Dr. Title, as I mentioned, had lost his dad, and our interim clerk, Ms. Caitlin Bassi, lost her grandmother, and always a difficult thing on either score. So if everyone would please stand back up and we'll observe a moment of silence. Great. Thank you, and our condolences go out to both of you and your families. All right, for this evening, we've got a relatively lengthy agenda. There's no voting items. This is our quarterly update meeting. 10 items. We're going to discuss and comment on the status of the fiscal year end 2012 audit processes, including the status of the fund balance at the end of the year, as well as the Board of Education return of funds related to the last operating year. We're going to briefly review the Board of Ed financial position versus the budget as of the end of the first quarter of this current fiscal year, 13. And we're going to review and discuss the Osborne Hill PCB remediation financial status, as well as the next steps that the Board of Education and the administration is taking. We're going to briefly go into private executive session so that the board can be briefed by the first selectman on labor negotiations and any thoughts that he might have on that and how that impacts the financial status. So I would caution that as we go through the financial review of both 2012 as well as the first quarter of this year, we hold any questions related to that might get us into a more confidential area. Then we're going to review all state reimbursements for projects, find out where we are. We're going to hear a brief financial update on the Metro Center. The RTM was briefed on this last evening. Are we having an audio issue here? All right. Then again, maybe not. All right. We're going to hear committee reports, subcommittees from the Board of Finance, as well as other committees that Board of Finance members serve on. The Not-for-Profit Subcommittee, the Budget Subcommittee, Cash Management, Investments, and the Audit Subcommittee. And lastly, we're going to hear a brief discussion from Mr. DeWitt, who worked with the Purchasing Department on new purchasing guidelines implemented for the town and the Board of Ed in the prior year. And that's the state of play for this evening. Any questions, comments from board members? Seeing none. We'll go to item number 1 on the agenda to discuss and comment on the status of the fiscal year-end 2012 audit. So I'll turn it over to representatives from the administration.
From here, fine, or you want me?
That's fine, Mr. Mayor. Does anybody have a problem? No, go right ahead.
There are two handouts, I guess, for lack of a better term, that go with this first agenda item. There are two handouts that go with this first agenda item. One is multi-page. It says total surplus, fiscal year 212 surplus. It says draft. It wasn't really intentional, but I think it's quite appropriate because the numbers do change.
Go ahead.
Everybody got it? So basically, there was a lot of discussion this last year about what our total surplus would be. And I'd like to be able to unveil this or something behind some kind of curtain or something. But the final number is $3,786,000 to the positive. What you have then on the first page there is a breakdown by line item. Not each, but many of the line items have a supporting schedule. And we have it on the top, obviously, the surplus of revenue. And on the bottom, the major changes and variances in the expenditures. I assume you've all read this. I don't know if you want to just open it up to questions. I don't think I should go through the whole document. What's the pleasure of the board?
I think that's fine. We can go for comments and questions. Anyone? Let's start with this schedule, right, the top page. Okay. Anyone? Mr. Walsh.
Why are there still $126,000 of grants going from 2001 to 2007 that are still unreimbursed?
Why? Well, I don't know exactly why, but what I do know is that these are grants that have been, the projects have been completed. The documentation has been submitted to the state. The state has submitted it to audit. The state has indicated on some of these items that they are short-staffed, and they just haven't gotten to it. This 126 items relates, this $176,000 relates to 8 items, one of which is, as noted there on the document, is $91,000 for the Ward High School project from 2002. The second largest one, I don't remember where it's from, but it was like a $13,000, and then the other 6 added up to the remaining $15,000, like $2,000 each or something like that. You know, at some point in time, this may be reimbursed to the town, but given the age and the, you know, and lack of any indication of or certainty of timing, it just seemed appropriate. I mean, well, you know, I mean, that actually goes to the next schedule. So forget, just so that's it was booked. It's been billed. It's been carried forward every year, but the state hasn't reimbursed it.
I presume that you still think we can get reimbursement from, especially going back to 2001, we're now 11 years after the date. The RTM had set up, and Mr. Tetro and I were on that committee, a state reimbursement plan and requirements. I presume all of our documentation on all of those have been submitted? Every
Correct.
piece of paper, correct?
Correct statement.
Okay.
Can I just interrupt? This is from 2011. They're old projects, but it was a 2011 issue that we did not receive the revenue we were supposed to in 2011, this $126,000. So we actually accrued for it because the state told us we were going to get it. So the question is whether we accrue for it again. They said, yeah, you're probably going to get it,
No,
but...
no, that's later. This is only on this column, not on this column.
I understand.
Okay.
So it does not go, they don't owe us money back from 11 years ago. It was from 2011.
But
Okay.
it's for projects related to 2002.
But we believe we're going to be getting this, correct?
We hope we're going to get it. I have no belief one way or another.
Okay, and does your office monitor this, or is the Board of Education involved in this?
The town monitors it.
The town
Town
doesn't have a complete grant monitoring system in place. That's one of the things that we've been talking about recently. But the town knows it's there. The town gets a schedule from the state. Town books the revenue based upon the schedule. The money didn't come in.
Okay, and that's all I have on that one, but I have others.
Okay. Go ahead, Mr. Walsh.
What are discontinued funds? What's your definition of discontinued funds?
That's actually, it took me, I don't really even know for sure. It's a budget item. It had no activity. The current budget actually has $145,000 in it. It is for the current fiscal year. It is related to if there's like a capital fund that where the project's been finished and there's monies left over, and that would be folded into the general fund. I think it might include some kind of property sales or land sales. I don't know if sales of town-owned property. There was zero activity in the account. There was $226,000 booked. That entry, as I understand, looking at the records and the history, was based upon an average of historical activity, but many items in the budget are not broken down by detail. They're just lump sum numbers based upon earlier year averages in activity. This is one of those.
How, if this is the sale of town-owned property, do we have a negative number of $226,000 in that account? Did we sell the property and book the profits, or did we do something else?
Jim, we booked revenue of $226,000. We didn't get any. That's why this is a negative to our bottom line.
We had a revenue budget line with no activity against it, so we were expecting 226, and we got nothing in actuals.
So we planned on the budget to sell $226,000 worth of town-owned property?
Or discontinued funds.
And what's the definition of discontinued funds other than the sale of property?
The sale of property is if we sell old police cars,
Okay.
and we do that at auction, that
Okay.
would go into that. There's a couple ledger accounts, I guess, that are rolling up to this category.
All right. And we booked that in the budget based on a yearly average of some period of time? How do we book that number? I mean, there's $226,000 in the account. How did we get to that number in the budget?
Yeah, what I stated, Mr. Walsh, was that number is booked upon a basis of the average of prior year activity.
So you look 1 year back, and whatever you did the prior year, you
Ms.
carry
Gardner would
forward?
have to respond to that. I was not involved in the preparation of the budget.
If I
Mrs.
may.
Gardner,
Oh.
do you have something?
Yeah.
Please.
If you look in this year's budget book, fiscal year 12's budget was actually $220,000 for discontinued funds. The year before was $140,566. This year, the budget we're in right now is $145,000.
Right.
And that's a combination of, as Ms. Bossy said, sale of town-owned property and surplus from discontinued funds. So we're on the hook for $145,000 this year. In this fiscal year, we're currently operating in and above the 220. Well, this says 220 that we didn't make. So
So what's the methodology for the budget item? Do we know?
Mrs. Gardner?
Anybody?
If you look at what we actually received over the last 3 years, the fiscal year 12 was an average, a historical average, with the expectation that we might sell a fire truck, a police car, whatnot. We did not realize any activity. We did not receive any funds. So the 226 is your variance number. There's
So the-
zero actual. And Mr. DeWitt is correct. In the current year budget, in fiscal 13, we budgeted down based on the historical trend declining
Declining.
to 145,000. And for 14, well, if you'd like, we could look at expectations
zero.
rather than historical trends, or,
Okay, so it's a 3-year average, and that's what you always do in the
Yes.
budget. That's the answer I was
Yes.
looking for. Thank you very much. Thanks.
All right. Can I go to the schedule itself? So the total surplus, quote-unquote surplus, of 3.786, 782 is revenue, and 3 million is expense. Now, when I break down the details, I'm just looking at the big picture items, okay? In the general taxes, we're over by about 1.6 million, which means we collected 1.6 million more than was estimated in the budget. That's current year and prior year, right? The levies.
Correct. Schedule A shows,
Yep.
breaks it out by current,
And
prior,
interest.
and
And
interest.
interest, right. But the big item there is noted here is $795,000 of the tax sale, right? That we had not budgeted for a tax sale. You don't budget for a tax sale. You did a tax sale, and you essentially, you collected $795,000 that wasn't accrued for, or that wasn't
That's,
estimated.
that's speculation.
Yep,
Basically, the tax sale, is my understanding, the tax sale was initiated, the concept of the tax sale
yep,
was initiated late 2011, early 2012, when the administration was, believed there would be a
a shortfall,
shortfall.
right. So that,
And then there was property scheduled for this tax sale, and when the date of the tax sale actually came,
right,
there was, I think the actual tax sale amount was plus or minus, a little less
of
than
people paid up when they
200,000.
heard.
So a lot of people paid up.
right,
You really have no idea how many of those people would have paid, could have
Right.
paid. 795 would be the total if it was all related, if all of them paid based upon the tax sale price.
right. So I just wanted to call out that number, because that was something that was unbudgeted and it came in. The other number I wanted to call out, because it's interesting, because the proper accounting says you have to account it for income, but it's not cash, and you'll know exactly where I'm going. And it's a concern that we had on the investment subcommittee, and that's $430,000 of mark-to-market gain. And that's obviously not budgeted. That is marking to market the investments as of the balance sheet date, which would be June 30th of 2012. So really, the fact that there's a $782,000 overage here on a net-net basis, 430 of that is caused by what is a mark-to-market gain and not actually a cash gain unless you sold those investments on that date.
Correct. There was apparently a negative interest variance of 179. and a-
Offset.
and an offset by a mark-to-market.
Right. And our concern on the investment committee was that mark-to-market could go either way, depending on the time of, depending on where the market is at that end of the year, and June 30th. Please.
I think, actually won't speak on it too much now because I think I'm on the agenda to.
Yep.
So I think that's to be discussed a little bit at that
Yeah.
time. But yeah, I think that it's been a continuing concern here that that account probably shouldn't have securities that are theoretically that volatile.
Right.
That they could go up or down by
Right.
$400,000 or $500,000. And I think that I can speak to that a little more and ask Mr. Mayor some questions about it when the
Yeah.
time comes.
Now, my point being,
And
thank
basically,
you.
let me-
Yeah.
Yeah, and one clarification, if I may, please. It says interest variance 179, mark-to-market variance 730. Basically, the number was budgeted as one lump sum. It wasn't
Yes.
broken down, so.
That's correct.
So basically, we ended up with.
A net.
The 430 mark-to-market. So we're just kind of making an assumption that the 179 is the interest variance.
Yeah, I understand what you're saying, it's a very, right, because
Yeah.
the
Because
budget is
since it's
over by
not-
251.
Right, since,
Right.
right.
I totally, yeah, I understand that. My point being that the majority of your 782 over delivery in revenue for the year, the majority of that 782 is actually due to a mark-to-market adjustment at the end of the year of 430.
Yeah, and prior to this year, the town only calculated the mark-to-market at the end of the year.
Correct.
Juliana, who's a joy to work with, who's the person in charge of this, is actually, this year is focused on that on a quarterly basis now.
Good. All right, so that takes care of the revenue side to show that net on a 200 and some odd $1 million budget, we were within $400,000 on the bottom line of revenue, if you take away the mark-to-market. Right?
Yes, sir.
Okay. So then we go to the surplus on expenditures. Surplus on expenditures, the savings on expenditures was $3 million. If we look at the $3 million, the majority of that savings comes from three areas. One, I would argue, is an accrual that hasn't been made yet, and the other two are real savings. Debt is $1,066,000, and that is due to the debt refinancing that was done, so we saved on interest, and I believe that was done in the fall of last year, correct? January, thank you. So that was done in the fall last year, of which point we saved $1 million on interest expense on the debt refinancing for last fiscal year, right? Then the other savings there that I want to point out, and we have them here to talk to, is $396,000 that the Board of Ed was able to realize in their operation and return to the town, correct? And a lot of that was the result of some of the utilities and things that were done on that score on the Board of Ed side. So that comes to, if you add that up, that's about 1.5 million of the 3 million. The additional quote-unquote savings, I would argue, isn't actually saving. It's $845,000. That's the reserve for the contract settlements that we had actually included in the budget. But since most of the contracts were not settled, that reserve is still sitting out there waiting to be used as an offset for the cost that would relate to fiscal 2012 related to the union contracts that hadn't been settled yet, right? Okay. So if we look, of the $3 million in savings here, that represents about $2.2 million of the overall savings, all right? And then you have nits and nats on the other things. Payroll, we saved some time because of open positions. Unemployment comp, we knew we were getting hit. Heart and hypertension, we got hit hard by $315,000, but as I recall, those were a couple of settlements of some long-standing cases, correct? And we got hit by some of the storms, Irene and Alfred, by about $140,000, right?
More than that.
138.
No, there's a couple Alfred and Irene.
Where are they,
lines.
if you could?
It's the 138,
Okay,
it's the 136.
Kind of in the middle.
got it,
And I think there's another one on another schedule.
got it. So we got hit a few different times by those storms.
Yep.
Okay. Any other questions on these items? I just wanted to walk down the schedule, that's how I saw it.
I'm sorry, I wasn't fast enough. Your comment about the top number, 782,
Yeah.
actually, because of the 251, comes out to be I forget what your
It
number was.
actually comes out to be, if you look under interest expense, they have a mark-to-market differential of
Right.
430.
That's right.
So that 430 is buried in that 782.
Right, so it's
So-
350.
350.
Right. But
350 is actually the cash differential, the rest has to do with a mark-to-market differential.
Right. But, and I agree with that number, but if it weren't for the tax sale, the tax sale was 795, our top number today is 782.
Yeah.
Without that tax sale, we're in the hole
If you-
$400,000, right?
You're right, but to Mr. Mayor's point, if you say that none of that money would have come in unless you did the tax sale,
Okay,
you could argue that some of that money would have come in whether or not you did the tax sale.
if it was worth $400,000, I guess is the real question,
Exactly.
right? Whether it
The
would,
only amount we can specifically tie to the tax sale is one property, I think it's like 174,000. That's my recollection.
because I guess my point is, and that's a valid point, my point is that every year, we can't be expecting a $795,000
You're
tax
absolutely
sale.
right.
Right. So if that number really didn't come in, we would have been $400,000 in all.
Yeah.
So, for budget purposes. All right.
Yep. Any other questions, comments?
More like 1.2 on a cash basis.
Right,
Right.
because of the mark-to-market. Right. Okay. Thank you, Mr. Mayor. Other questions, comments from board members on this item? Anyone? Do you want to continue and walk
Yeah.
us on?
Then you have a second piece of paper, second handout, one piece of paper. The fourth line says proposed adjustments. That actually should probably read potential adjustments. 'cause
Where is that one,
We're
Mr.
not
Mayor?
actually proposing those.
Can you hold that one up for us? I saw it earlier. I'm
It
looking
says
for.
schedule of proposed fund balance adjustments, 6/30/2012.
Yeah, thank you. Yeah, it's a separate schedule.
Not the FY13 material variance.
No.
No, it's FY12.
Is it in this?
Yeah.
Oh, it's in the big one.
No, it's,
Oh, it's not in the little handout, it's in the bigger handout. No. No, it's a different one.
Let's take a second to make sure we're all on the same.
No. I got you.
Oh, okay. Oh, yeah.
Anybody know where in this big package? Halfway or?
Hold on.
Sorry, guys.
It's towards, it's about a third of the way down. It's right before material variances, but after the state aid reimbursement.
That's the one.
Yep.
Got it, thank you, Jim. Yeah, it's about, Jim, do you want to help the rest of your classmates? Including me. Yeah, there it is.
Jim only likes the Democrats.
There we go. He's bipartisan. All right. Go ahead, Bob. Does everybody have it? All right. Let's go ahead.
Hi. Okay, so basically what this is, the first column is obviously is the identification of the item we're talking about. Second column is whether it's expense variance, third column is whether it's a revenue variance, and third column is a total variance. And we've done this, and if you looked at the potential adjustments, depending upon their impact, they're listed under either expense or revenue variance. Would you like me to take you through these?
I would, please. Would you do that? I think that's the most efficient way.
Okay,
And
thank you.
people feel free to ask questions on each
As we go
individual
along,
item.
correct.
Yeah.
Yeah, sure. The first item is apparently back in 1997, 1998, there was a project the state did in Commerce Drive. We drawing a blank on this.
We paid 40 out of CDBG.
We paid 40, they billed us to 29,000. They owe us 29,000, we have $28,000 receivable.
No. We owe the state $30,000 in addition to the 40 we already paid them. From 1998, we just received an invoice from the state. We had no
Right,
idea
right,
it was coming.
this is an actual.
So this is a project closeout from 14 years ago for $30,000.
And we have an email from Bill Hurley, who's the engineer at the time, and he's recommending paying it. He said we most likely
Right.
owe it, but we didn't know it until
Right.
now.
Yeah, this invoice came after we had closed the books out. It came in, so we're booking it in 2012 rather than 2013.
And you wonder why we get rated number 50 for financial policies for states. 14 years later, we got an invoice?
Yeah.
That's what I just said to Barry. It must be, right?
Okay, so we have not paid this yet, right? Right?
Correct.
The general rule is if they take 14 years to bill us, we could take 14 years to pay
There you
it,
go.
right? Okay. All right,
I like that rule.
yeah.
Okay, the second item is record tax revenue on a July to June basis. Currently record our tax sale, it's called the 60-day rule. We record our tax revenue on a September to August 30 basis,
Yeah.
based upon that a lot of people were paying the prior year taxes, if you will, after June 30. This is a recommendation from the auditors. They would like to see us clean it up and get on a pure July to June tax basis. So what that would mean is accruing only 10 months of revenue in the year ended 2012, and then going to a 12-month schedule, July 1 to June 30, starting with fiscal year 2013. The impact on the 2012 budget would be $1 million.
And this is basically cash receipts that came in that were backdated into the fiscal year, and the auditors are saying, stop that policy on a
Correct.
go-forward basis.
Correct.
What did we do on this last year?
Nothing. This basically, we've been, every year, we've just been on a September 1 to August 30 basis. So this is switching over from a September 1 to August 30 basis, switching from that basis to a fiscal year July 1 to June 30 basis.
So we're going to start, any new dollar that comes in on July 1st, we're going to book for this fiscal year?
Correct statement, sir.
I thought there was a 60-day rule saying that any monies that came in during July and August, the auditors were saying that they wanted put towards the previous fiscal year. Am I
I don't
mistaken?
think want to, I think allowed is the proper term. They
Okay.
prefer we don't.
They prefer any monies that come in during, from July 1st, August 30th, they'd prefer to be assigned to the previous fiscal year?
No.
Other way
current-
around.
Other way
The
around.
way around, the current fiscal year.
Right.
One question I had when I read this, this was relatively new information to me, that this practice was ongoing
Okay.
for years and years and years. If the auditors commented on it, how come it was never in their management letters? to
We're not
us
the
in
only
past?
town who did this. That was a common
understand.
practice, and we always book back the collected, whatever hits our prior year revenue in July and August, we're booking back to the prior
Right.
year.
So you always got 12 months in, was essentially
Correct, and it
what
was
they're
just
saying.
not the June to July where everything else is recorded. So it kind of, they're the ones who kind of said, hey, if you could pick a year to do this, so in reality, you're only recording 10 months of prior year
Right.
revenue this month as opposed
Because
to
of the
12.
tax sale and because of the
Well,
other items.
this
forward,
number
yeah.
wasn't that big in previous years, but because
Right.
of the tax sale, we've collected $1 million in July and August.
And now they're saying it's material, put it,
They're saying if you can do it,
Yeah.
great. If you can't, you can keep it this way, but we are switching over all of our other municipalities to go on a June to July.
got it. Any other questions on this item? Mrs. Leclerc?
So this is all money that really applied to the fiscal year that ended?
What it is, it's from the grand list of 2010. So it's hitting a prior year revenue in fiscal 13 because it really relates to a fiscal 12 period. So we move it to a fiscal 12.
Now, well, usually you keep your books open till like the beginning of October. Will this allow you to close faster?
We keep open accounts payable to early August.
Right,
This entry I can make any time up until the audit's closed, quite frankly.
okay,
But I only move back the July and August collections.
okay.
So, and again, this number last year was more like $590,000. It was just because of the tax sale revenue that we received, and this is a large number. He is recommending do it, and if he said if you can't, so that's driving up our surplus, obviously, because within this 3.8 number is $1 million of this
timing issue,
number. Yeah. So, and his suggestion was if you can't do all of it, maybe some of it, and maybe phase it over a couple of years if you don't want to take a hit all at once.
Okay. Any other questions on that item? Let's go to the next item.
Next item is similar.
Yeah.
People work in June, get paid in July. The
Paid in
town has
arrears.
normally recorded the amount on the pay date rather than the work date. Last year, the town initiated the process of accruing that, properly matching the activity with the expense by booking $350,000. This year's payroll that was paid in July for services performed in June was $1.3 million. So if we take the full $950,000 hit, that means there'll be no that clears that up. It puts our expenses and activity in the same period, and it not prevents is not the right word, but then this will be accurate going forward.
So it's a very similar concept to have a clean cutoff as of
Correct, Dave.
activity as of
Yes, sir.
June 30th. One question I have on this, why the differential from one year to the next in terms of the amount of the
Well-
adjustment?
No, the
Bec-
350 was a partial last year.
So again, it was a phase-in
It
of
was a
the...
phase-in. So what I'm not recommending, what I'm saying is
You are
potential,
Yeah,
I would do it.
yeah,
Okay, is take the whole, instead of, divvying it out, 350, 350, 250, or whatever's left,
all right,
just take the whole 950.
and have a clean cutoff.
Correct statement.
Mr. Walsh?
I presume the auditors want a minimum of 350 put back in?
They would like it,
A minimum?
because we did 350 last year.
Sure.
And it
Okay.
it just eliminates the gap to budget entries that have to happen.
But if we fund the full 950, we should not have to do this again until salaries raised to a sufficient
leave that
level where we might
$1,300,000
have
on
to
the
bump it
books.
up. at
Ne-
some-
You'll
Never
never
do it
have to do
again,
it again.
never.
Okay.
Right. I mean, and it goes back to
There'll
the
be a-
fluctuation of 52 weeks. Sometimes there's 53 weeks, and we wouldn't have to deal with it.
Right.
Right. Yeah, we'd have a clean
It's a
cutoff
one-time
every
adjustment.
month.
But if payroll goes up, say 10 years from now, payroll is standing at
No, what we-
1.8 million for the year?
No, because you would be clean on your policy of a June 30th cutoff. So what this is adjusting is the actual policy.
Okay.
Not the amount.
All right.
So it's a policy change.
Thank you, Mr. Chair.
Any other questions, comments? Board members? Okay, can you go to the next one?
Yeah, the next item basically, I'm going to kind of explain it. We'll get to the end and you'll understand it. We have $70,000 there. Basically, sewers are constructed, sewer assessment notes are issued, and then bonds are issued to pay off the assessment notes. They're called SANs. Caitlin educated me on today. The homes connected to the sewers are assessed to cover the debt service. And then there's a due to, due from set up in both the general fund and the sewer assessment fund. Ideally, all town collections from the sewer assessments are used to offset the debt service, and ideally, all debt service payments are recorded against the assessment. There are a few complexities that make this not just a straightforward plus or minus entry. For example, if the bonds get refied, and then you got the whole tracking issue, et cetera. Or or there's a lien put on everybody's home when this assessment is established. If the person sells the home, the lien's paid off, so there's advance payments. So you don't really have a one-to-one match to the original schedule. Things change. Okay, and because of that change, and because they don't always match, we kind of have, and what the town does every year is bill the sewer for their reimbursement of the debt service payment. So as of right now, there's about a $200,000 that's been collected by the town that hasn't gone to the assessment side. Well, actually, it's somewhere between 100 and 200,000. We haven't really fared through the records yet. And so what we're proposing here is to discontinue billing the sewer assessment revenue until the accounts are trued up.
Questions, comments on this one? All right, you want to walk me through it one more time? Because I don't know if everyone else got it, I just didn't.
No.
So who are you billing, actually?
Basically,
Where you lost me was the last couple of sentences,
Yeah,
where you said,
took us a while to work through this. So, the sewers are built, constructed.
yep,
There's debt service issued. Okay. The sewer assessment fund, and, you know, they set up an account, due to, from, it's got zero balance. Okay. In the year one, the debt collections are anticipated to be, the debt service payment is anticipated to be, pick a number, 10 units.
yeah. You know what that number is, it's a scheduled number.
Yeah, it's a scheduled number, it's 10 units. Okay, so we need to pay our debt service 10 units. The debt service comes out of the general fund. The sewer assessments come in, collections come into the sewer assessment fund. If you have the schedule, and if there's a perfect match, no liens have been been paid off in advance, no bonds have been filed, then they just balance each other out. So that the town would bill the sewer assessment fund the 10 units. The sewer assessment fund would pay the 10 units, and at the end of the month, or the end of the year, you'd have 0 balances.
Yep,
Okay, and you do that every year.
yeah,
Okay, but then what happens? You get the situation where liens get paid off, the bonds get refied. So the schedule isn't accurate anymore based upon all the variability that takes place. So then you end up with a situation where the debt service isn't any longer equal to the sewer assessment fund.
so it's like an intercompany account
So
that's
it's
out of
a
balance.
bunch of intercompany account stuff, so where the town bills that every year, so because of that situation where they're not equal anymore, what we're recommending here is the town not bill the sewer assessment fund until such time as the balance of the debt outstanding equals the balance of the sewer assessment revenue that's due over time. I'm really surprised I was able to do that.
Is this,
I was impressed.
and it's all about sewers.
Garbage in, garbage out.
The 70,000, is that a one-year correction? Is that multiple years?
I think my,
That's the fiscal 12 revenue line that we had in the general fund,
Oh, I see,
that we
okay.
took, that we
So this-
took
so this
in
is
as
just-
revenue.
This is just zeroing out the past
Adjustment of the
practice
revenue.
and new practice going forward.
I believe there is a 13 budget item for it,
That's
but
not
going
new
forward into
practice.
14, I think the recommendation would
true-up.
make it zero. Yeah.
Yeah.
we're not quite certain of the exact amount yet, so it will definitely hit 13, may hit 14, we don't know.
Any other questions on this item? All right. Reserve for tax overpayments.
All right, this is something that people overpay their taxes. And this year, they overpaid them by $510,000. Plus, we have $65,000 from prior years that people have overpaid that that have not been refunded. The equivalent numbers for prior years to the $510,000 for 11 was $295,000. For 2010 was $282,000, and for 2009 was $270,000. The town has, prior to this year, not recorded this amount, okay? Joe Centofanti was in the office,
Materiality.
and he basically, he was actually surprised at the magnitude of the number, whether he missed the prior numbers or not, whether it's breached the materiality level that he has set for the town, I have no idea. But Caitlin and I and Joe had a discussion, and it was determined to book this. And this would kind of be booked the same way as an accounts payable accrual.
Right.
Yeah.
It's a liability.
So this is a one-time booking again, and then at the end of the year, we'll, actually, we'll I think we determined we're going to do it quarterly? Yes. We determined we were going to do it quarterly. Every quarterly, we will true it up.
Questions? Mr. Stone?
So where's this money?
Sitting in revenue.
Just in revenue?
Mr. Walsh?
Do
For
we
3
let
years.
people know that they've overpaid?
There's a 3-year statute also.
Do we let the public taxpayer know that they've overpaid?
Right, that's why, if you notice, the prior three-year total is approximately $850,000, but there's only $65,000 remaining on the books from those 3 years.
Where is that, Bob? You've referred to that a couple times. Is that on one of the schedules?
No,
So how would I know that?
I just told you.
You referred me to something to tell me, and I didn't see it.
No, I referred to my earlier statement, sir, I'm sorry.
Okay. So
But
it
I
was,
couldn't.
so it was 850, it's 575, but to
No,
Mr.,
Yeah, it was approximately $850, the cumulative of the prior 3 years.
but to Mr. Walsh's question, what's the process for alerting the taxpayer that
Uh,
they've overpaid their taxes?
They actually deduct it from the current year bill, which makes you wonder why there's still $65,000 out there for overpayments. And I don't, I don't know the answer to that question.
What if someone moved or
Estates?
something?
They moved, they're out of state, don't pay attention, yeah, I don't know.
Go ahead, Mr. Walsh, do you have a follow-up on your own question? I don't want to...
Well, the question I wanted to ask was, why is the number so large this year? Because you were going down numbers that were in the $200 to $200+ thousand range, and all of a sudden now we're more than doubling that. How did we go up by more than 100% this year?
Not 100%, but 40%, excuse me, 66%.
What was the previous year's numbers?
294,
294.
282, and 270,
What's this year's?
270?
510.
Sounds like close to
Sounds
double.
like it's doubling, Bob. It's a 100%
Well,
increase.
300,000, 66% of 300,000 is 200,000, 66%. Isn't that what I said?
No.
What did I say?
40%.
I lied.
But do we know, to the question, do we know why it went up so much?
40% from the top down, 66% from the bottom up.
Do we know why?
We don't know exactly why, but it's, one of the potential reasons is the significant volume in refinancing, because when somebody refinances or when there's sales, it seems like there's some uncertainty as to who should owe the taxes, so they make them pay the taxes in advance.
would we be able to get somebody to get back to us regarding what their thought process is and why that's so over? Is the tax department like trying to monitor that, or of why it's so
Well, I don't
out-
think, I
out of
mean,
the ordinary?
I don't think it's something that we will know unless we, sent people a letter and say, why did you overpay your taxes? I mean, it's, I mean, I'm not sure the value of that either. I mean, we owe it back, we'll end up getting paid back.
Does it always end up getting paid back?
Well, like I said, the carry forward right now is 65,000.
Right. So what happens to that 65,000 next year?
No, it'll be deducted from their taxes bills this year.
Okay, but we've already established that there's some instances that people have moved, people have died, they've whatever. What happens with that money?
There's a statute of limitations where you don't have to pay it back after 3 years. I can certainly investigate what amount we've taken, if any, into income, or if that 65,000 is for 3 years only, or is cumulative over a longer period of time. If that's the board's pleasure, I can report back on that.
Mrs. Albin, is it pertinent to this?
It is.
And then I want to go to Mrs. Leclerc, because you had your hand up. Go ahead.
Is it required by state statute that if the funds are unclaimed, that they have to go into the state unclaimed fund?
Escheatment.
I have no idea.
It's a good question.
Yeah.
I mean, I wouldn't know the answer, but it's a possibility that that's where the funds would have to go.
I had not
into
thought
the
about that,
unclaimed
but
fund for
that
the state.
certainly makes sense.
I know that corporations need to do
Yes,
that.
exactly.
Mrs. Leclerc?
I recently saw a situation on our tax system, because now that you can go online, and a person brought it to my attention that they had been paying their taxes, and then so had the mortgage company, and so they had paid double taxes. And if you go on the new system, it shows up in red that they have an overpayment sitting there, but they didn't receive any kind of correspondence from the town or a refund, and they were still getting current bills. So I'd really like you to check that that is what's happening, that it isn't sitting out there.
I'll certainly check on that, yes.
Okay.
Town policy is to deduct it from the future year's tax.
Okay,
But
maybe it
I'll
just
double
hadn't
check on that
happened
and
yet, but
double. and-
Sounds like it's a
Yeah.
communications issue. Mr. Brockville?
Yeah, Mr. Mayor, I just lost you on one small component of this, so I just wanted to double check. We have a 575 variance, right? But you're mentioning the 60.
No, it's basically,
Well, variance is the wrong word.
it's not really a variance, it's something that we haven't recorded in the past, so it becomes a variance by
I
the sake of
understand.
recording it.
But then you mentioned a 65 remaining, that's where I'm losing you.
575 is a combination of 510
Right,
from the fiscal year ended June 30, 2012.
Okay.
And 65,000,
since then.
no,
It's
prior,
Before
Oh,
that.
prior to fiscal year 2012.
Okay, thanks.
So essentially, we have $575,000 liability out there for taxes that have been overpaid.
Money's sitting in our reserve.
And they don't have a reserve fund. This establishes the reserve fund. In the past, it was just flowing through as excess revenue. Right.
Right, yes, in the past, it's gone to the bottom line, to the general fund balance.
But so we have an accounting issue which is being resolved by this,
Correct statement, sir.
but we have a process issue, a notification issue.
Yeah,
these
I was,
taxpayers.
when I investigated, I mean, I didn't audit, I just
Right.
inquired.
Right.
But I will make more diligent inquiry and report back.
Can you report back, please? Mrs. Leclerc, did you have any other? Mrs. Albin, did you?
I would just note that the process issue could be difficult because I would suspect that a lot of the issue that occurs here is through lenders, mortgage companies, banks, because there's, as Mr. Mayor noted, there's a great deal of volume on refinancing. And I think that's probably the driver here for the most significant piece of the dollar figure we're looking at. And I would tell you from experience that that whole system isn't a lot better than the Department of Motor Vehicles in notifying people. So it puts a great burden on municipalities I don't know how they do that job, given that the other piece of the component does not work well. So the consumer needs to be also in charge of paying attention to their tax bill.
Thank you.
And following up on Ms. Albin's statement, it raises the question of why I wanted to know if the tax department can figure out why, because we've gone through many periods of time in the last 10 years where there's been significant refinancing as rates have gone down. Has this happened in other years? Is this not an aberration but happens every time that there's a major refinancing period? Or if it has not, then why is it happening now? And it would be nice to get an answer from that from maybe the tax collector who's had the opportunity not only in her short term here, but in her other community on why this might be happening.
I'm sorry, Mr. Walsh, maybe I wasn't clear. The tax collector has no idea, based upon my conversation with the tax collector. Based upon further discussion with the tax collector and trying to identify any and all possible reasons of which she may be aware, we finally came up with the potential of the impact of the refis.
But the impact from other periods of refinancings and, you know,
I don't know.
Polito's a real estate attorney as well, where we've gone through years where we've done 1,000 refinances in a year.
No, I'm responding only to your comment about requesting of the tax collector.
Okay.
That has been done, you know. I mean, if you want, I can go back as many years as our records allow, and I can do whatever you like, actually. I'm happy to do that.
It just seems like such an aberration. It begs the question of why is it happening now?
Yeah, I mean, we just, I mean, yeah.
Mr. Baloo?
Thank you, Mr. Chairman. I apologize for being late. I'm jumping in a little late in the game here, but as far as the refinance stuff goes, when you refinance a mortgage, you're supposed to fill out, as an attorney, a sheet of paper that you file with the tax collector's office, basically saying that you're refinancing, there's a new bank, and you're to send the tax bills to that bank. And that one step, it would seem, would eliminate this problem. Now, perhaps it's a situation where if people are doing refinances not using their own attorney, maybe the banks are not filling out that particular form, but that certainly would seem to be at least a source of why some of these double payments are happening. But if you fill out the form, you submit it to the tax collector, bill goes to the proper place, that shouldn't happen. So that's just one step in the process that maybe we could check on and make sure that that's being done with some regularity, because I know with some of the banks it is an issue.
Okay, so to recap on this, assuming the numbers are right, we've addressed the accounting issue of a reserve and properly recording the liability, which is fine. The next is the process issue of whether we're fulfilling our fiduciary responsibility on two fronts. Number one, to the taxpayer who's potentially overpaying. And I don't know what that obligation is, but we should better understand that and make sure that whatever our obligation is, we're fulfilling it in terms of notification. And the second item is, and I have some experience with this in the corporate world, as Mrs. Albin points out, over a period of time, once the statute of limitations runs out, the state likes to get their hunk of it. So we should make sure that we're fulfilling our obligation there. Or else maybe that can go to pay off the 14-year-old invoice from earlier this evening. But one way or the other, we ought to understand what our obligation there is, from my own perspective, because I don't want to get into trouble on that. Anybody else? All right, the next item.
Next item. I do not know how many years ago, but there was a period of time when the town of Fairfield served as the payroll agent for the Fairfield Housing Authority. During that period of time, the town apparently at some point switched to paying the payroll before they received the money for the payroll from the Housing Authority. The town discontinued paying the Housing Authority's payroll, and at that time there was a $165,000 receivable on the town's books payable by the Housing Authority to the town for payroll payments the town made on behalf of the Housing Authority. There's been considerable dialogue $100,000 of that $165,000 was received after some conversations and on August of 2011. There remains $65,000 outstanding that's owed to the town. The Housing Authority is not in the greatest of financial shape, and it seems prudent to write that off, not discontinue attempting to monitor it and attempting to collect it, but it seems prudent to write it off our books.
So this isn't it's a reserve,
No, I would write it off,
but still
I w-
continue
yes, sir.
collection.
most definitely.
Mr. Walsh?
Maybe Mr. Tetro can answer this, because we handled this, you and I, Mike, when we were on the Board of Selectmen, and we got that $100,000 in. Where do we stand in regards to this matter? Why can't they pay this a remaining $65,000 off over some period of time, even if it was 20 years?
Thank you. You're right. We covered this last summer. And structurally, they may pay it off over 20 years. But since last summer, if you remember, they came to the Board of Selectmen. They said, look, we owe you $165,000. We can pay you $100,000 within the next 2 weeks or a fairly short time period. They said, we'd like another 6 months to work out where our finances are. They've had some management turnover. They've had some issues in terms of changing accountants, that type of thing. And they'd like time to get through that and then come back to us with a payment program. In the last 12 months, they haven't been able to come back to us with a payment program. We're not here to sit on their door and pound on it and say, pay up, because they're doing very good work for the town. They're getting their house in order. They've hired a new executive director. They've cut back on staff. They're doing all the right things you'd expect them to do, but they work on very thin margins because they work on money from the federal government. And these are the folks that do things like Section 8 vouchers in town, that type of thing. They run some of the affordable housing that we have over at Pine Tree Court and Trefoil Court. So we're looking at this and saying, they still tell us they owe us the money. We still agree they owe us the money. But we're not sure what the time period is. So at this point, the question is, we can keep it on the books as a receivable. Or in a more realistic sense, look, if we write it off at this point, then whenever they get to paying us, whenever they get it, it's an upside in whatever year they do that. It's not anticipated we get all $65,000 in any one fiscal year at any one time.
And I'm not saying we pound on their door every day looking for $65,000, but I would more prefer stay on the receivables to keep on people's radars and to try to figure it out than to just do a one-year write-off of it, because I think that the authority's going to hear that and not really try that hard to get us our $65,000 back. Further, I presume, I'm not sure, and you might not be able to comment on this, that there's some woman who was the head of this thing who took off for some place called Tooth or Consequences, New Mexico, and that the federal authorities are on her. And obviously, some of this money is somewhere, and I would hope that through the efforts of the federal government, since this is a federal program, maybe the town could get some of these funds back and at least show something to the federal government that we don't have zero on our books, that we have something on our books, $65,000, and even, it seems to be kind of a new debt. I mean, it was only last August. It's 1 year. I don't see why we need to write this thing off immediately, even if it just sits there, because clearly when I look at this list of variances and proposals, it's a large group of numbers to reduce this total projected surplus down to a number I'm not really that comfortable with. So I'm trying to find things that we don't do all of these things on, and that just seems to be somewhat of it's been out there for a year.
Well, just to correct that, and I will look to Ms. Bosny perhaps for help, but that 165 was built up over about a 10-year period. It wasn't like there was a $165,000 payroll that just didn't get paid that one time.
Sure.
It built up over time. So part of what we went through last summer was a bit of a reconciliation on that.
Okay.
So it's much longer than that, and the judgment at this time was just to take a look at that and say, look, if we're not sure exactly when that's going to come, if it was a question of waiting a year, or as they said last year, wait 6 months, or let's wait a year. And again, this is what we're doing as a conservative move on our financial situation. from a practical standpoint, we are still going to attempt to collect the money from them, and we're going to still work with them to get that. We haven't stopped working with them, and they've been very cooperative as we went over the past year with them in terms of being very open to us about where they stood, what moves they were making, and how we could work with them.
Do they have legal actions against anybody just for the collection of any funds?
I don't know.
Might be something to find out, because at least maybe we'd have some projection on, maybe we can get part of that collection of that on a judgment if they were successful in collecting on one or something else.
We can certainly follow up with that. But we could do that independent of what we do in terms of the write-off here.
Mr. Brockville?
I just wanted to actually second what Jim said very eloquently. I mean, I understand totally what you're trying to do, Bob and Mike, and I think it, in general, is to be applauded, which is trying to clean this thing up and rationalize the process. But I would strongly say, for both moral and financial reasons, that in this case, I was thinking the exact same thing you were, which is that even if I know that you intend to continue diligently trying to collect this money, there is a temptation that once it's been written off, that it just isn't on the burner the way it was before. And I think also, it also could, even though we hope to have you as first selectman for many, many years, this could, based on the way it's being described, this could be a multi-year process. And we don't know in the future what some other administration might do. So I think having it on the books as a receivable kind of in front of our eyes is something I'd feel more comfortable with, too. It's not a huge amount of money. I mean, that's obviously not the issue. It's more of a moral
Mr. Chair?
thing, I think.
Yeah, a couple comments. One, I think your suggestion to make it a reserve rather than a write-off has the same financial impact, keeps it on the books, but doesn't have it. Secondly, when I first came to work for the town,
Many moons ago.
many moons ago, yes, it seems like it's been forever ago, actually. But I did some work for the Housing Authority to help them with their financials and get things organized and structured and help them figure out their financial position. And I would say that their financial position turned out to be more problematic than they thought.
Was it due to this truth or consequences thing?
Not significantly. It was due to just the entire operation. New director, we the town, held meetings with them, with the feds, with the state, and helped them get through that process. As Mr. Tetros said, they have hired a new director. They are on an upward path, but they are operating on very thin margins. So I think we should try to collect. I think we should continue to monitor the situation, and I really like your suggestion to just establish a reserve, which I think satisfies Mr. Walsh's and Mr. Brackville's concern.
Go to Mr. DeWitt.
So would the reserve give us the same visibility that we would have? So next year, when you're sitting here talking to us, we'd see this again?
Well, you're only seeing it now because we're setting up the reserve, but it would stay on the books, and we'd have a continual, as we do now, and it would be, no one could say we wrote it off. I think that's Mr. Walsh's concern. And I think that's a reasonable concern.
I want to be the third one to agree with this point that Mr. Walsh brought up, because last budget season, much to Mr. Tetro's credit and Mr. Hiller, we heard about town properties that we weren't getting paid rent on, and we had never heard of that before. So it sounds like kind of the same thing to me, right? There was revenue there that you brought to our attention. Why we would take this off the books is kind of the same ilk to me, if you know.
I think if I might, and I don't think there's no wrong opinion in what's being discussed, but I would point out that for the last 10 years, this money was in a receivable. The difference is that we need, Mr. Mayor has focused on putting a spotlight on this, so wherever we decide to account for it, we still need to track it. The reason it went from 0 to 165,000 is we perhaps didn't have that spotlight internally on it the way we should. Right? And I think it was this board, we went from, in January 2011, we were told this number was 65,000. In July of 2011, when it was presented to the Board of Selectmen, it was $165,000. And that's when we took some rather dramatic action by the Board of Selectmen to kind of get to the bottom of this, get everything on the table and find out exactly where we stood. But I think within the recommendations, I would suggest this. We are presenting this to you tonight really as a draft or as a proposal. We're not voting on this tonight. We will come back and vote on these with the permission of the chair at the first Board of Finance meeting in November. So I'd say let us take your input on this, and unless there's other comments, I don't mean to not hear further, but if there are other comments, let us evaluate where we are and come back to you with an approach that makes sense.
Everyone okay? Okay. Anybody else have anything? Thank you, Mr. Perslow. All right, let's go on to the fire pension, and then the open contract reserve, we're not going to talk about. That's what the private executive session is for, to provide us more information on that. So the fire department pension briefly?
The fire department and the town completed union negotiations last May or so, if I remember correctly. The union negotiations called for retroactive payments for 2011, 2012, full year 2012, and obviously going forward. There are 5 people. Part of the union negotiation was the maximum pension of the firemen was reduced from a top of 80% of salary to 75% of salary. There were 5 firemen hired in 2011 who, at the date they were hired, would have been, based upon the old union contract, would have realized pension plan potential of 80% of salary. But the union contract as negotiated was retroactive. So they now are only theoretically eligible for 75% maximum pension. The firemen, in a show of amazing brotherhood, decided that that wasn't fair for those guys, and so they gave up their retroactivity in exchange for the town, for these 5 gentlemen to be able to realize the full 80% potential pension. The actuarial present value of that difference is $35,000. So the firemen gave up their retroactivity, and in exchange, the town will fund pension plan to make the pension plan whole. The town comes out fine on the deal. Comes out fine.
Any questions, comments on this from Mrs. Abbott?
Not on this, but when appropriate, I have one follow-up on the tax payment issue.
Okay, let's hold off
Yeah.
on this one and see if we refer this one on. Mr. Walsh?
I didn't know that that fire contract was finalized. Isn't it an arbitration?
No, sir.
Not the fire one?
There's nothing currently in arbitration.
So this is the incremental expense to the pension to the top off of these 5 gentlemen, but it's offset within the salary accounts that are on the other line item that we saw.
There was no retroactivity paid, correct.
What was the savings? What's the delta between the two?
The town comes out okay.
That was precise.
We can talk about it more maybe in executive session.
Okay. All right. We'll go to Mrs. Albin's question, saying nothing else.
Sorry, I didn't think of it at the time, but on the revenue for tax overpayments, if we could also get an answer to one more thing. Just as I noted that if the monies are there after the statute of limitation, do we have to turn them over to the state? But Mr. Mayor noted that the action taken currently is the taxpayer's bill is adjusted the subsequent year for the overpayment. As in most fiscal situations like this, the customer is owed the interest for the amount of time that the money sits on someone else, their money sits on someone else's books. Does the town of Fairfield owe them an interest payment for the time this overpayment sits on our books, unreturned to them? And it's something we can get an answer for later. If we're not doing it, we might need to know if we need to be doing it.
Mr. Mayor, please follow up on that.
Yes, sir.
Thank you, Mrs. Albin. Any other questions? So to sum up this schedule, we started with a discussion of the $3.786 million, which was an increase to the fund balance over and above what was anticipated. We discussed what made up that increase, and we come all the way down with all the adjustments that are proposed to the actual differential that would be shown in our books, a positive variance of the fund balance of $294,000, should we accept all these adjustments. Is that correct?
Correct.
And so the difference on just so that we know on a cash basis, we talked about the cash basis differential, that mark-to-market issue was about $450, right?
30?
$430. So we're about $140 differential between that. So on a cash basis, we're roughly flat with where we thought we would be. And the reserve actually looks a bit better because of that mark-to-market differential. Is that the correct way of looking at it?
I mean, the numbers are the numbers. I mean, I'm
Right.
not exactly sure. I mean, the general tax is at a, $1.6 million favorability
Right.
amount. I mean, the regular
Yep.
payroll is $617,000, but it all nets the way it nets.
Right, and it comes out to the 294, within 294 of where we thought we would be on the fund balance, assuming all these other adjustments, is what I'm trying to say.
Board of Finance did an amazing job last year.
That's not what I'm trying to say. That's actually, it lines up my next question, though. What's the fund balance going to be? If we were to accept all these adjustments, what's the fund balance going to be, and what is that as a percentage?
Right.
Yeah, I think that's, well,
I mean, the fund balance would,
we were both lucky and unlucky. I mean, we balanced out. Right.
our total fund balance is 15 million, so.
Was.
So the fund balance would be 15,294,000.
Okay, and divide that by our overall budget. I'm trying to figure out what the rating agencies are going to
I
see
don't know what
here.
the budget went up by, but you have to take that into consideration, yeah.
Right.
Can we take a look at that for the November meeting? That's going to be important to understand what that is. We've been very cognizant of trying to improve our reserves as a percentage. We've got hit with some surprises on the internal service fund in the past. And I just want to see what they're going to be looking at next time they look at us. Anybody else have any questions? Mrs. Leclerc?
When this comes back to us in November, will we get to discuss each item again? Because there's 3 of these items.
Sure.
So I'd kind of like to know.
Do you have
Right.
specific
Just the-
requests
yeah.
you'd like to make right now? Feel free.
Well, one is the sewer assessment revenue reversal. I'd sort of like to see how the mechanics of that works before we stop billing it and
Okay.
reversing it. Because it's been something we've always done, and so if we don't bill it, are we going to forget to bill it in the future? And is it not going to be accurate? So I just want to understand that a little bit more. And then I'd like more information on these tax overpayments and also on the housing authority. And I'd still sort of like, even if it's minimal, some sort of plan set up for that, whether it's $500 a month or, something to get it moving.
Thank you. Can you report back on those 3 issues?
Mr. Chair, with pleasure. With respect to the sewer assessment revenue and the tax overpayment issue, I would offer Ms. Leclerc the opportunity to come into the office and go over it. I'm not rather than bring it back to the full board. She may have more, being an accountant, she might have more specific questions that the full board need not, entertain.
It's entirely at the board's pleasure. What would you like? Is everyone fine with that? Mrs. Leclerc, are you fine with that? Okay, so let's hear a little bit more if we can. It is a tough explanation.
There's nothing more that we can say about these two items.
Maybe we could
can
see an
just say it
example of it on a
again.
piece of paper.
Maybe do T, you want to do T accounts?
T accounts.
That's it?
Yeah.
Okay, we can do T accounts, that'll work. And then also, with respect to the third item, Ms. Leclerc suggests, is, I'm not sure, I guess what you're asking is that we come into an agreement between now and November 2nd with the Housing Authority with the payment plan?
Not necessarily, but yeah, maybe some discussion.
We
if
do
you
have
haven't-
discussions with
okay.
them frequently. It's not like we don't have discussions. So I'm not exactly sure what you anticipate.
Can we
on
get a
this item
statement from
between
them
now.
of what their position is on this and where you guys are in terms of
What their
working out an
opinion is.
agreement? Right. Yeah. Sure, if they have it. Can we get a better understanding of their financial position, a better understanding of their position on the $65,000? There's ongoing discussions about if they're going to pay it back, how they're going to pay it back. Mr. Tetro, did you have something you wanted to say? I don't know that anything's going to be finalized by that point in time. Okay. Yes, Ms. Leclerc.
But also whether it should stay as, I guess it's currently a receivable in the books, whether it should stay as a receivable or a reserve. That's what I kind of want to understand better, is where it best belongs.
I think where we ended up in this conversation, if we were going to do anything, we would keep it on the books as a receivable and set
Okay.
up a reserve.
And I guess the question would become, what's the reserve percentage? Is it reserved at, is it fully reserved at 100%, or is it reserved at something less than that? And without additional information, it's tough to come to the conclusion on that. Does that help, Mrs. Leclerc? Mr. Marizot?
No, that was very good in clarification. Thank you very much, Chair.
Yeah. Anyone else? All right, seeing none, that was a long item, but I thought, actually, given the importance of it, very, very appropriate. Thank you. We're going to call up, Mr. Mayor, thank you. Mrs. Bossy, thank you very much for your work on that. Can I call up the Board of Education to discuss briefly the return of funds and then the first quarter financial position in the PCB issue? And I think we can move through these relatively quickly. And I'd like to thank you for the documents that were prepared. They were done very well. So, welcome.
Thank you. Which one? You want to share this? Sure. You can have your own. So in Doreen's summary, in addition to the first quarter report, you got the year end for 11/12, and that showed the return of funds. And I think Mr. Mayor or Mr. Flynn referenced that, and it's exactly for the reasons that we discussed last year and hadn't changed. So I don't know if there's a
So
whole lot.
the audit hasn't resulted in any meaningful adjustments to those numbers,
The audit is ongoing.
Not done.
Right, I mean, they're in now.
right? Nothing that we should be aware of in terms of any adjustments or anything? Okay.
We're very close to what we had said in June. I think we were in the 345 number, and it's gone up a bit, but that's
Okay.
what we said. The financial position for first quarter is in there in gory detail.
Thank you for that. That was very
Yeah.
helpful. Did we have questions on that,
Right.
anyone?
So,
It was, they actually had a narrative
yes, there's a narrative,
that I read, and I'm trying to locate. Yes, thank you. Are there any questions on where the Board of Ed stands at the end of the first quarter? I know I had one, if Does anybody have one? Quick question. Where did enrollment turn out as you started the school year? Because I noticed you have more teachers. So what did that do? Where did enrollment end up?
Enrollment's actually lower than projected, but the way the kids sorted themselves out, we actually ended up having to hire a couple more teachers. It's a quirk of where they end up. At the elementary level, we ended up with kindergarten enrollment that was lower than anticipated. So we were able to reduce some positions there, but we have first grade enrollment went up, surprisingly, from the prior year kindergarten. And as those kids distributed themselves with our class size guidelines, we ended up having to hire net 2 additional teachers over what we budgeted. Still fewer teachers than we had the prior year.
So what was the overall budgeted enrollment, just a gross number? It was 10,000 something.
Yeah, it's 10,300 would be an estimate. I didn't bring my pink sheet.
Can we
10,300, and, we're just about at the same number we were the prior year. We had looked at an increase from the prior year, and instead of going up, it stayed about the same.
So what's the, what was that number? What's the differential? If you don't have it now, you can.
Yeah, it's in the vicinity of 100, plus or minus.
So
We could
were-
just send you the pink sheets, and then it'd be easier. You could see it. We had to, the high school, the way the enrollment sorted itself out, once we knew where the kids were actually taking courses, then we had to go back and adjust exactly how many sections we need. And so we had to add some fractional numbers at the high schools as well to keep some of those class sizes within the limits. So we had to add a special education teacher because we had some very involved special education students move into the district over the summer. And it wasn't a total number of students, but some of the students that we did get that caused us to add a position there. But, we're within, 4 of the 1,475 people we have. So on a percentage basis, not very much. But going forward, if the enrollment continues in this direction, then we'll actually be able to, we'll be coming in with fewer teachers next year at elementary.
Any other questions on this item? Anything related to the first quarter? Mr. Walsh?
Can I just ask about your turn of surplus? Just a question.
Oh,
Because
sure.
it seems like a lot of the numbers were driven by the $567,000 variance for electric, correct? Did that allow you to make, where you added on other maintenance accounts of $284,155, and then the emergency maintenance projects of $638, did that allow you to do more maintenance projects before the end of the year because you knew you had that savings built in?
Yes, the biggest one was the McKinley roof.
Okay.
That was the biggest piece of that, I
And
guess.
how much was that, Doctor?
That was about
238.
238,000, which kept, first of all, it fixed the problem immediately.
Yeah.
And secondly, it kept us from having to come back and have people bond it.
True.
And it was
allowed
an
you-
ongoing big issue, as we know, so we
Was-
were able to take care of that issue.
Was that the only large one that you like thought about and said, you know what, let's just get this done since we know we have these savings?
That was pretty much it.
Okay.
Any other questions? Mr. Bolito? This is 2012 or first quarter of 2013.
Thank you, Mr. Chairman. Looking at the spreadsheet,
Is it 212 or 213?
this is 2011, 2012.
Okay, so it's not related to the first quarter.
Right.
It's related to the funds they gave back.
Right.
Fair enough.
The line item for substitutes, I might have just missed this in the narrative, so forgive me if I'm repeating something, but you have a projected end-of-year balance of negative 725,589. Just what's driving that?
That money gets expended when there's a vacancy that occurs that's unanticipated. And so we save the money in the teacher staff line.
Right.
And we end up essentially overspending in the substitute teacher line.
Right.
So what you end up there is you'll see some end-of-year balances in certified salaries, but then you get the overage
Right.
in the substitutes. And
Okay,
that's
fair enough.
generally how it plays out.
Fine, thank you.
Yeah. Mr. Walsh?
Dr. Title, on the second line of that same schedule, the additional retirees, this is over and above what you had budgeted.
Correct.
Okay, and what's the differential, just in numbers? How many did you budget for? How many ended up coming in? And how
This
is,
was an
and I guess in a general concept, if you could just have a good discussion, is how will that change your budgeting for that in the upcoming future?
Yeah, it's a good questions. It came up all last year in the budget process. 11, 12, again, an estimate, I believe we had budgeted for, say we budgeted for 12 and we had 24, something like that. Again, these are round numbers. And each one is worth, 35,000, round numbers. This year's very similar. We budgeted for 14, and we have 24. So we need to look at the 5-year average on that and see where we are in terms of putting this budget together for the upcoming year. Because we've noticed an uptick the last 2 years, especially. The thing we don't want to do is get caught short and budget 26 and have 14, and then we have a $400,000 hole. So this is the art of that. So in fact, I think we went back last year. I'll have to go back and look at the data. I think we actually collected that data for as many years as we had it. And so we might be able to move that up a little bit, but I'm very cautious about being too rosy about it. I think there were some downtimes in '09 and maybe even in '10 when the economy kept people from retiring because particularly teachers who had accumulated a nest egg that they were going to plan to use, say, to pay for their post-retirement health insurance, which they don't get. That nest egg was cut in half. So I think there was some pent-up demand, for lack of a better word, on retirees. And we just don't know if that's going to be continuing or whether that was a 2 or 3 year blip and we're going to go revert back to the mean.
Does some of that having to look at the age of your staff and realize that, a certain percentage higher than normal is reaching retirement age or is past retirement age and just holding on because of the economy?
We have a lot of people that are retirement eligible.
Yeah.
A lot. People stay and teach and administer here for long periods of time, longer than they, typical. And I don't think it's all because of the economy. I think that we've got a lot of people who do 35, 36, 37 years. They still enjoy it. They're still good at it. They want to keep going. It's a good place to work, and they stay. There are other people that I believe get to the 35, 36, 37. They get to age 60, and they are looking at a 5-year window before they're Medicare eligible, where they have to pay essentially 100% of their health insurance. Now, typically, these folks are not on the family plan, but if you're typically on the 2-person plan, that's a pretty sizable bill.
Yeah.
So sometimes people will stay beyond age 60. Typically, someone who's worked starting at age 22, at age 60, they're eligible. They will work for 3, try to close that gap before they're Medicare eligible. So I think those are all factors, but we definitely have people who are right there and would go. We definitely have that.
It's definitely something that I think was going to come up in this budget season. In the past, from being on the RTM since the late 90s, the variances were 2 here, 3 there.
Right.
And now they're getting up in the 10s and 12s, and it's adding up to serious money. So I guess if you can try to do an analysis to be able to better percent with what's happened for the last 2 years, that would be great.
Yeah, I think we'll try to do that and still be careful that, some accounts we end up doing better than we project, and other accounts we get slammed. We've got a very volatile category of special ed expenses.
Yes.
And if we miss on the retirees, and then we have a bad year on special ed expenses, which are often out of your control, there's nowhere to go. So, we're looking at potentially, having that money available in case we do go over in special ed, we have it. So I just don't want to get overly optimistic about it and then get burned and then have to freeze the budget early in the year and all that other stuff. So there's a happy medium in there. I agree. It's an issue. We'll do our best.
It might make sense to have some type of reserve fund and explain how you got to that number.
Well, that would be nice.
Or something.
Yeah.
Because
people don't like boards of education to have reserve funds for some reason. I've never been in a place where they've allowed it. So I think actually here, historically, I believe the Board of Ed used to
Or was
have.
it teacher's reserve?
Yeah.
And we committed to returning the money if we didn't
Well, that's what I'm
use
talking
it.
about. It's having a reserve fund that you would commit to turn back if, for example, there were more retirements than expected, or if there was special education costs, there wasn't as high as special education costs as you thought there was going to be. So it's some rationale for that.
Yeah, and, and there's other things that happen. We have boilers conk out, and we have to go fix them. There's, we can have a bad winter, or you can have a good winter in terms of snow removal, heat, and so forth. There's a lot of big moving parts in our budget.
I just want to add, I think the fact that we returned, a sizable amount of money this year shows our commitment to turning over funds if we're not, using them, so. We're trying to build credibility.
Thank you. Anybody else? All right, I think one of the big items that you guys are confronting in the first quarter happens to be the Osborne Hill school PCB remediation, as well as I know there's a fair amount of public interest in what the go-forward plans are. And to be very clear, Dr. Tidal and the Board of Education have been very proactive with myself, and I don't want to speak for the First Selectman, but have been very proactive in keeping ourselves in the loop as to what their processes is going to be. And they asked us to come to a meeting last Friday where they spelled out what they were doing, what next steps they were going to be. And hopefully they'll share some of that this evening. And I want to thank them for that. And I know I speak for our board when you have our continued support as you go about this issue. It's not an easy issue you're dealing with. And thank you for coming back tonight to update us further on an update that you gave us over a month ago. So with that, I'll turn it back over to you.
Do you all have this spreadsheet here, or you did not get it?
Yes.
Says Osborne Hill, we have copies. Osborne Hill Elementary School PCB project expenses. Yes.
I think I saw it, but I'm not sure when I
It was
saw
a late email, I think yesterday.
Yeah.
This thing moves around every day.
Legal training. Yeah, exactly.
It's a two-pager, well, 1.5 pages.
Yeah, cool, thanks.
You got it, thanks.
Is everybody all set on this?
Okay. So, last time we had given you some sort of big-picture numbers.
Yeah.
And I think there was some interest in more detail behind those numbers. So on the first page, which I'm doing this right, Doreen. First page is showing what we have encumbered that's hitting us in 12-13, what we've actually paid on those encumbrances, what the balance is. These are known costs that come to approximately $483,000. And they cover the items that are there. You actually have the vendor and so forth. And I also point out, and this relates to Mr. DeWitt's presentation later, that because of the emergency language in the Board of Finance's purchasing requirements, rules, guidelines, that allowed us to do this and open the school. Without that, you're looking at hundreds of thousands of dollars of additional costs that would have been incurred in order to open school. So I want to point that out. The second page is what we anticipate our expenses will be for the balance of the fiscal year, but they're not encumbered yet. And one of those, on the second page, the fourth line down, Woodard and Curran Consultants, is the consulting firm that we're going to hire to provide the report and inspection of all of our schools with respect to the go-forward plan on the PCBs. All right, so that's sort of topic 2, but that's in here as a projected expense.
Dr. Tidal, just and Doreen, maybe this is for you, on the first page, I see the PO amount comes to 478, 327.16. It doesn't match the 483, is that, I'm assuming it should, right? So there's, I don't mean to bring up a,
There's some overtime in there that is just an expense and,
not part of the PO process, but an
not
actual
part of the PO
expense.
process.
We should
Yeah,
probably.
there it is.
Total of 483 is correct.
Okay, so the total of 483 is correct. Where's the overtime expense? It's labeled.
It's there, it's about the 8th line down, 8 and 9 lines down. Prep for painting overtime. That's probably your delta. Right,
Okay,
as are our employees.
so it's 483 to date,
Right.
and then you're estimating a number 238.
Right, and I will say that that may not be the end. This is where we are right now. And the reason it's not the end is that this is an iterative process. So we have a plan that we have submitted to the EPA to get the library suite back to action. And once that's approved by the EPA, we're going to, enact that plan, and that plan is going to cost us about $93,000. Once we test, if it works, that's the end, and that's the end of the expense. If we test and it doesn't work, or, we may need to further expend funds to remediate that area, but we don't know yet. That'd probably be a month.
So being an optimist,
Right,
we would say that for $722,000,
right.
it's allowed you to clean the school, with one big exception, to deliver the curriculum, and to pay for a consultant to come in and help evaluate next steps with the other schools.
That's correct.
It also includes the temporary gymnasium that allows you to deliver the curriculum for the balance of the year. But it does not solve the longer-term issue with the gymnasium, as well as what the original project was for the school,
Correct.
which was the window replacements.
You've summarized it perfectly.
Okay, I listen.
I get that.
Now, I think it would be beneficial if you told us a little bit about kind of the go-forward plan. What are these consultants doing? I think our colleagues have not heard that.
So I'll let Pam do that.
Okay.
And I just want to preface, we haven't had a chance to brief our board because we haven't had a meeting, but we're working on getting a letter out to them and to the district. But we are in the process of hiring Woodward and Curran, which specializes in handling environmental issues, specifically PCBs. They're going to come in and help us build a history of our school district, the materials that we have, the different building structures, look for similarities. As an example, they'll be able to look at the floor in Osborne Hill and say, oh, you have the same floor over at what ABC school. This is something that you need to look at, and they'll be able to go through and build a history. They'll be able to cross certain schools right off the bat because there weren't any PCBs used in construction in a certain time frame, so we know that McKinley's not an issue. The new Ludlow Middle School's not an issue. There's other schools that have gone through extensive renovations. We would expect that they wouldn't have an issue there either. Then from there, they have different steps that they can do to go through and make recommendations on how we proceed. They're a little bit technical in nature. I don't want to get into the details of it because I don't want to misspeak on it. But I do want to let you know that we are planning, as part of the informational process and keeping everybody in the loop, having Woodward and Curran come and present to the Board of Ed, and then we're hoping to get a joint Board of Selectmen, Board of Finance meeting in December to have them come. They'll speak to you, they can outline what they're doing, and then we'll go on to the RTM to have them filled in and kept in the loop as well. And then what we're hoping they can do, once they've assessed the situation, help us lay out a game plan as to what we need to do. If it's testing, and it may or may not be testing in some areas. If we do test and things come back, helping us to work with the EPA to put together a process. helping us look at our buildings and determining the risk assessment in those particular buildings. They do have a risk manager on board who would be working with us to be able to tell us what the real safety issues are in a particular school, and help us prioritize the needs of the school so that, hopefully we won't have 5 buildings, for example, come back that need to be worked on all at once. Hopefully we won't have any issues, but if we do, being able to assess them and rank them, this school has cracking caulk, they need to go to the top of the list. This school's in excellent condition, you just need to encapsulate this, you can get to it, in X number of time frame, and then go from there. So that's our game plan. We all recognize that we're not experts in this, which is why we wanted to get someone on board. Although schools are starting to call Tom Cullen for advice, so maybe he's going to start a side business on it, I don't know. And just go from there. We're trying to be proactive. There are some other schools that are starting to deal with this. It's all sort of relatively new to a lot of us. They've dealt with it a lot more, it seems like, in Massachusetts. Our consultants have told us about a lot of universities that they've worked with, particularly Yale. We're seeing if we can get some information from Yale as to what they did and how they communicated with their folks, and try and use that here to build from. So that's where we are.
Mr. DeWitt? Thank you.
Thank you. Yeah, thank you, Mrs. Icona and Dr. Title. I got to assume timing is really critical on this, because I'm making a general assumption you don't want to do anything that you just said while the kids are in school. Is that correct?
They can go in and
can
build
do-
a history, yeah.
Oh, the historical stuff,
Yeah,
right, but
and
the
that'll all
action
take
plan,
about 3
right?
weeks. In terms of cleanup and that kind of thing, no,
Right.
most of that you can't do, I don't believe.
So are we going to ask this Woodward and Kern
Kern.
for a plan that starts the day after we close the schools for this summer?
That's a good question. We hadn't really gotten that far yet. We really wanted them to just put together the assessment and then work with them to get an action plan going.
I mean, we missed that window where we're a year away, right? We're summer to summer, I guess is what I'm saying. It's not like we're going to do this over winter break or anything.
Yes and no, it depends on
Yeah.
it depends. There are some things
Yeah.
you could do over winter break,
Well, we've done, there's some things you can do over a weekend.
yeah.
And it all depends on the scope of
really?
it. Yeah, when we did some of the work at Osborne Hill, we had people, they'll work weekends, they'll work overnights. It all depends on the nature of the work. Obviously, something as extensive as what we may have to do with the gym at Osborne Hill, that kind of thing is clearly a,
Right.
no occupancy allowed kind of a thing, but
Right.
we need them to help us set up a game plan.
And are
The
they going to help you
timetable.
with the gym at Osborne Hill? Is that like one of their priorities, or are they a
They're
follow-on?
not involved in that.
No, that's separate.
We had a prior consultant working on that, and the prior consultant has been in touch with the EPA, so we're using someone separate on that. They're the same people that we're working on for the library.
Got it. Thanks.
Mr. Brown, and then I'll come to Mr. Bolito. And I'll go to Mr. Stone.
Well, Mr. DeWitt covered it for the most part, but I guess I'll just say, it sounds like you have a pretty good plan here, and you're moving forward with it, and the consultant has experience with this, as you set up in Massachusetts. I was going to ask about that. But does he have to assess, this company has to assess every building, every school building, all 16 of them?
Not necessarily. He'll be able to look at the building history and knock some of them right off the bat. Like, you won't have to go to McKinley. You won't have to go to Roger Ludlow Middle School. Burr.
So where will he have to go that he knows of? Do you know how many schools?
Well, any of the older schools. I mean, you'd have to go to Mill Hill, you'd have to go to Sherman, you'd have to go to
The
Dwight.
elementary schools?
Most of them, yes. We've done extensive work at Stratfield, so I don't know that he needs to go there.
Okay.
I don't want to speak because I want him to look and say, I don't need to go to this building.
And when will he get back to you on that, did he say?
He gave a time frame of about 3 weeks,
Okay, so 3 weeks from now, you'll know what schools he has to deal with?
give or take,
Give or
getting
take.
the contract in place in terms of time frame, yes.
Okay, thank you.
Mr. Bolito? Then go to Mr. Stone.
Thank you, Mr. Chairman. What I'm concerned more about is not so much the plan, which it sounds like you have a good handle on, it's the execution of the plan once you have it, the contractors that you use to do the actual work, and how much it's going to cost. The firm that you're hiring, the Woodard and Curran, do they, if in essence, act like an owner's rep or a project manager, where they will act as a point person to make sure that the plan that they set forth is executed properly by the contractors on the ground? Is that part of the service they provide?
I don't know, maybe Mr. Cullen could answer that.
Yeah. Come on up, Tom, this is your bailiwick. Right.
Hello.
Hello, Mr. Cullen.
Good. No, the Woodard and Curran is really a consultant. We won't be hiring contractors under their plan. What we're doing is coming up with a history of the buildings related to hazardous materials, specifically PCBs, so we can share it with the community and show that we're being proactive with the fact that we found it at Osborne Hill, Fairfield High School, and a little bit at Tomlinson. So there aren't a real lot of districts doing this. You're not required to test for PCBs unless you're doing a big renovation project or a window or door project, but we're being proactive and going to build a history for Fairfield. We have to share that with the United States EPA, Connecticut DEP, and certainly the community. But what they're going to come up with is a plan of action that we can use for funding, budgeting purposes, and long-term to address our long-term facility plans where we want to do work, such as Riverfield, which has just started, and other schools, and then know how to deal with the PCB issue and cleanup.
So it sounds like what you're saying is they're going to essentially gather the information, create an archive so that you have a database essentially to work off of in terms of what the situation at each school is that has PCBs. They're going to formulate an action plan in terms of testing and what else exactly?
No, they won't be doing any bulk sampling of caulk and materials, because immediately when you do that, that has to go to the state. It has to go to the Connecticut DEP, DPH, and then if it's above 50 parts per million, it has to go to the US EPA.
I guess what I'm getting at is once you have this action plan in place, what's the next step? How do you go about hiring the contractors to do the actual removal where it's necessary?
You do that through a large renovation project or a window and door project we'll be submitting for funding.
So this isn't a standalone project. Basically, it's done in conjunction with, if you go in and renovate, then it's part and parcel of that project. So basically, whoever your owner's rep is for that particular project, part of their responsibility would be to monitor, test, and handle PCB
Correct.
removal. Okay,
A good
that
example
answers
would be like Mill Hill.
Right.
Mill Hill is out 3-4 years for a full renovation and addition because of the 5 portables. We'll have a history from Woodard and Curran that'll give us an idea of what we can expect to find when we go into Mill Hill.
Right.
Once that Mill Hill project comes up, we'll know that the contractor's going to be aware of and the architectural engineering team is aware of what the plan's going to be and what kind of hazardous materials we're going to run into at Mill Hill.
Okay. What about Riverfield? Because obviously there's a building committee set up for them, and they're a little bit further along the process than Mill Hill is. How are you going to interface with them in terms of adding this element that perhaps they weren't aware of going into it?
We have to, because the building committee for Riverfield is really only going to look at the piece of the building where they may take demolition work in that area or put an addition on. They're not looking at the whole Riverfield school. That's not their charge. Their
Okay.
charge is to look at eliminating the portables, adding the space that the MGT of America enrollment identified as capacity deficiencies, and then they're going to come up with schemes of where an addition could go at Riverfield. Where that addition touches Riverfield is where they're going to need to test for hazardous materials. They don't need to go in and look at the entire Riverfield school.
Understood. Okay. But they're aware of it, it's on their radar, and whoever the hires their owner's rep, they're going to be aware of that as well.
Correct.
Okay. Thank you.
Welcome.
Right, Mr. Stone.
I'm sort of following up with Mr. Bolito, but we could be, there could be like 10 schools that we have to test. Am I correct?
There could be, yes.
Yeah.
But I want to be careful about using the word test, because we're not, we may not necessarily need to test.
Well, what I'm getting at is if we do test or we do whatever, we find these PCBs, I assume we have to clean it up. And so why are we even checking schools that we not going to do renovations to or anything like that, because we're exposing the taxpayers to potentially millions of dollars worth of cleanup? And that's part A. Part B, what other towns are doing this proactively? And do we have to do it proactively?
We do not have to do it proactively. We do not have to test unless we're doing a project.
Right.
And that's why I've sat in here the last time I was here at this table and said that this is a town decision. And that's why we're going to bring Woodward and Curran in front of everybody. We have to have the buy-in from the town bodies, because should we discover issues in our schools, we're going to have to clean them, and we're going to have to, it's going to cost money.
But
And you need to be aware of all that as we move forward. We could take the stance that some other towns have taken, which is given the standard line of the EPA does not require us to test our buildings for PCBs unless we are doing a project in them. And so for the people that have written to us as board members from Mill Hill School, from Dwight School, and I'm sure in the works from other schools, when are you going to test my school and how do I know that it's healthy? In response to that, we have tried to be proactive and say, you know what, we're going to go out there and try and get an idea of what our level of exposure is. We can, if the town so decides, make the decision that, you know what, we're just going to go strict by what the EPA says, and we're not going to test anything, we're not going to determine whether or not we have a liability. Personally, I think this is the right way to handle it, but if we go through this process and find out from the majority of the Board of Selectmen, the majority of the Board of Finance, the majority of the RTM, they aren't interested in footing the bill for anything that we find, then that's where we are.
Well, to follow up, if we do find it, is there funding available to remove it, or are we on our own?
You mean, is it a reimbursable thing from the state, or is it,
Yeah,
we personally didn't budget for it, but we have some state legislators looking into it, and it's sort of gray water right now.
Well, I think before we test or whatever, I think we should know the potential, I think the people should know the potential cost of taking care of this.
That's one of the reasons why we want to get the consultant on board to give us an idea. That's why I've been real shy about getting into the nitty-gritty and using the word testing.
All right,
Because
well,
once you
whatever
start
words
to
you wanna-
test and you find something, then you immediately need to put an action plan in place with the EPA. So I think it's best that we hire this consultant who can at least build the history and give us an idea of what we need to be looking at, rather than going around and Mr. Cullen, what did you say? It's $14,000 a room to clean. So we can't just start cleaning the rooms right off the bat.
No, but just to follow up, I just think the town bodies have to know, have some estimate. It's just like when we decided to have two high schools, to be honest with you, I don't think the town exactly knew the real hard cost of having two high schools in town and what it did to taxes. So that's what I'm concerned about.
No, that's,
Hey, Bob, here, if I can follow up, and then I'll go. Having had the opportunity to sit in on this meeting on Friday, let me see if I can answer your question in this manner. What this consulting firm comes in and does is, through looking at a construction history of the schools, along with Mr. Cullen and his team, they prioritize where issues may be, right? And then based on where those issues may be, the question becomes, what does the town want to test in terms of that prioritization? Commensurate with that is an education program for, and I would argue that education program has to be for town officials as well as the public. Because as Mrs. Iacono points out, as Mr. Cullen pointed out in the meeting, and as the consultant pointed out, we're farther along in this process than many other communities, certainly within the state of Connecticut.
Correct.
There's very few municipalities that we can point to that actually have done as much as they've actually done. Now, to your specific question about how much it's going to cost, the conundrum there is this. Dr. Title can't even tell you with any degree of certainty how much it's going to cost within the next 90 days to clean Osborne Hill, because it's not something that's within his area of control. Because he's going to go in, he's going to clean it, and they're going to test again. And if the testing comes out that he didn't clean it enough, they have to clean it again. So you do get into this never-ending loop of having to test until an outside third party says that you've hit whatever the area is. So the potential expense could be extraordinary, correct?
Yeah, unless you remove all the PCB at once.
Right.
PCB-laden material.
Which is why it's very important that everybody be educated and that we follow the expert guidance that we
But
get.
my point is, and not to belabor this.
Sure.
If other towns aren't testing, why do we have to take the lead? Why do we have to stick our neck out?
It's a value judgment that the town is going to have to confront. But the issue is it hazardous? Is there a risk? And we need to make an educated
But if none of the
opinion of
other
that risk.
towns are doing it, why do we have to do it?
There are some towns doing it.
Yeah.
Most of them are in Massachusetts right now.
What about Connecticut?
And the issue is that,
Did you say, Tom, there's 7 or 8 in Connecticut?
right,
Do we get the list?
Yeah, I can get
Just
you a list.
email it to me? Okay.
Yeah. Mr. Walsh?
And just to follow up on that, Bob, I mean, one of my concerns is that we have schools that look just like Osborne Hill, or the same
Exactly.
generation. And my concern is, and maybe as part of this analysis, we're going to have to get an environmental attorney to give us an opinion on this, a legal opinion on this, about whether we should be looking at it or not looking at it. Because what I don't want to see is, when I used to do litigation full-time, is some attorney making some argument saying, you knew you had a problem at Osborne Hill, and you knew you had a same-generation school across town. You knew it, the school system knew it, and you chose not to do any further testing or do anything, and you exposed these children, or this generation of children, to this potential or alleged harm when you could have done something to correct that. I don't know what the answer is. I think as part of this analysis, as we get educated, maybe we're going to have to hear from an environmental attorney about whether there's any exposure of us ignoring doing testing, if we know that we have a problem in one of our schools.
I understand what you're saying, and I agree, but my point still is, if we have schools that are built in the 50s, so does Stratford, so does Trumbull, whatever, they probably all have the same problem that we do. And maybe there's ways to get funding from the federal government. You know, I mean, if every town that's not in as good a shape financially as us has to do it, they're not going to have the money.
And you're absolutely correct, and that's why they're exploring those items with our state legislators and the administration. The difference between us and some of the other towns, they may have the issue. We know in one school we do have the issue. They don't know unless they test it. Right. We had a test because there was a project going on in that school. Our number came up, and I firmly agree with you as regards the concern over the legal point of view and just the ethical point of view. I don't think you don't test in the fear that you might find something. I don't think I want to be that guy.
One more point and I'm done.
Yeah.
Every house that was built before 78 or whatever has lead paint. We don't test them all.
And I
You know,
agree.
and if you do test them, you have to take care of it, especially if there's kids in the house.
Right.
So that's what I'm just saying.
And I think it's an excellent point, and I think that's why, and one of the things we discussed with the consultants on Friday, and thank you once again for arranging that meeting, was the actual education process. Because that point is extremely valid. And that was a point that the consultant discussed with us on Friday. And that's got to be a core point to this, is educating the town officials and educating the public. It's very valid. I'll go to Mr. Brockfield and then Mrs. Allen.
Most of my questions were answered by your back and forth, although I would ask Dr. Title to define conundrum for me. But,
It's on the fourth grade CMT.
Obviously, you didn't do well.
I still have the second grade book, I'm working on it. My only question is not really a question, it's a bit of a statement, and I think it's been answered, but I just want to, it would be very helpful at some point, I know you're going to do this, but just want to state it, to educate us a little bit about what PCBs are. And what's coming to mind immediately when I'm listening to Mr. Stone's point is that, because I know he's not trying to come off as cold-hearted, is this some kind of, I'm trying to imagine, is this something that is in the air, for example, and that if it's there, it's exposing the children no matter what, or is it something that's behind paint, for example? And, right, for example, asbestos, right, which we don't necessarily go looking for example, unless there's a project. So I'm just saying that it would be very helpful when you come back to us to give us a lot of education on what PCBs are and what the dangers
Yeah,
are.
but they have great handouts. In fact, they gave us one while we were sitting there, but there's tons of material. And if you're really looking for something to do, you can watch go back and watch the Fair TV presentation where we had the EPA come, the state DEP, Board of Health. They went through a whole big Q&A, gave a lot of facts and information. That's available online.
August,
Sometime in August. I was away, there you go.
It's the highest-rated show in Fair TV history.
That's exactly what he said.
We dispute that.
That's right. It's the Nielsen ratings. It's also,
Our budget hearings are barn burners.
Yeah, it's true. I agree. We also have some things on the website, by the way. There was a very good Q&A done, a fact sheet done for Osborne Hill by the Department of Public Health that was very helpful as well.
Thank you. Mrs. Alvin.
Mr. Walsh makes some very good points, and the question asked by Mr. Brackfeld is a very helpful one, because as you're already doing, educating the public is one of the key things here. This situation takes me back to my premier days on the Board of Education in 1999 or 2000, and McKinley School. So the board has quite a task before them in educating the public and communicating to the public so that people can understand PCBs and their dangers, if they're dangerous, as to when you're exposed to them. And we also need to be certain that we are careful to be sure, because we are people who live in a litigious society, and we do have to take that into account, because the issue of a school in the district is what will drive everything else. And we know it exists in one school, and I couldn't agree more with Mr. Walsh's comments. So it seems all too familiar to me.
Thank you, Mrs. Alvin. Any other questions on this item? The one comment I'll have is that the task before us right now, collectively, is you have $724,000 that we know of to date that is not budgeted for within your budget. And we need firmer figures, and then we collectively need to come up with a plan to pay for that.
I think right now, tentatively, we're hoping to have a firm figure that we can bring to the Board of Ed for the November 27th board meeting. If we think it's in good shape then and the board approves a request to go forward to the town bodies for that, that will get the ball rolling. Probably would end up coming before you then in January, right? Because we wouldn't hit the December. You got to go to the selectmen first. So if that's sort of roughly the time frame right now, it's not cast in stone, but that's sort of what we're thinking, because we really need an answer as to whether, the town is favorably inclined to give us a supplemental appropriation, because this is completely unbudgeted. So thank you for that consideration.
Thank you. Any other questions, comments, concerns on this item? Hearing none, thank you for your time and for following up. I'd like to say we look forward, but I guess we'll be aware that we need to hear more. I'll allow, I know members of the public might be here on this, so I'll allow quickly, are there any comments on this from members of the public? I want to be respectful of people who might have come out tonight. Anyone on this item? Seeing none, thank you very much. Mr. Mayor, you had a comment?
Yes, Mr. Chair, thank you very much. I'd like to suggest that we move item number 6 to precede the executive session, as that item pertains to school projects, and Mr. Cullen is here.
Do we have any objections from board members on that? No, that's fine. Yeah, can we have a motion to move item number 6 up in the agenda, please? Do we have a second? We have a second, Mr. Bolito. All in favor? Opposed? Abstentions? Okay, that item is moved. Mr. Cullen, why don't you come on up? It's nice of Mr. Mayor to be respectful of your time and get you out of here. The floor is yours, sir. Let us find the schedule. And this should be brief. It's this schedule here, everyone, and the buildings committees listed, the buildings listed. Right, Mr. Collins?
Correct.
Okay. Please go forward.
Well, sometime last week, my office talked with Bob Mayer, specifically Sal Morbido, who tracks a lot of these large projects and the reimbursement piece, and that we wanted to be able to provide the Board of Finance an update and status on what projects were still open or with the State Department of Education Bureau of School Facility. The process is a very lengthy one. You can see Tomlinson is still on there. We have not received a letter from the state which has approved everything to date and moved that project to audit phase. And that's what we look for. Once the project goes to audit phase, they send their audit team down, which is a different branch of the state. They come down to the town and they review all the open invoices, paid invoices, purchase orders, a final closeout of everything. So this is kind of a recap of what projects are still open. Tomlinson Middle School is waiting audit phase. The 2 annex buildings at Osborne and Sherman are now closed. Stratfield Elementary School, there's a final EDO 46 payment application pending. That means that the state has it. They're reviewing the change orders, and they'll write us a letter of what they found eligible or ineligible based on our findings. One of the reasons some of these are going fairly long is the state's gone through some changes with employees. The manager of the department left, and they didn't fill the position. And their change order man, actually a man that just reviews all the change orders that come up, retired. They finally hired someone new, so a lot of this stuff is sitting in piles up there. But they are getting completed. Fairfield Woods Middle School is still ongoing, so there'll be a lot still going up to the state there. EDO 46 are the payment applications. As the contractor does work, we submit applications for payment along the way, and all the change orders. And then Fairfield Ward High School is the new roof. The next one you'll be seeing will be Riverfield School.
Any other questions? Mr. Walsh?
The Fairfield Ward High School roof, it says projected cost $11 million. I thought the number had come in significantly below that number, like
did.
almost half as much.
Correct.
Okay,
It
why is
did, but the number we filed with the state at the time was the number that the Town Facilities Commission approved, which was 11 million.
At some point, do we change that number to whatever the bid number becomes? Because otherwise, the percentage of reimbursement's always going to be half as much.
Yeah. We don't actually change it, but the state will. As
They
they
will.
write us letters, they'll say, this is what we've accepted.
Okay, so at some point, that'll change along the way to whatever the
Correct.
actual number is that we have a contract for.
Correct.
Okay.
And it changes also with the change orders.
All right.
As the change orders come in, the number will go up a little bit, the state will accept that.
Okay. I just want to make sure, because it just surprised me to see
Correct.
$11 million. Thank you.
Any other questions, comments, concerns on this item? I have one question. Thank you, Mr. Cullen, these are all the school items. Mr. Mayor, on the town side, are there projects that we're owed money on the town side from the state? Yeah, Mr. Tetra, you have your hand up, please.
right. One big one would certainly be the Metro Center.
Metro Center, right.
And we'll cover that during the Metro Center update. Because of the timing of the request when it came in, we didn't have time to consolidate all of this, Mr. Chair, as you and I discussed, I think.
So there are some others, though.
There's the Metro Center. I'm not sure if there's anything off the top of my head. I'm not sure what
There's some
else.
bridges and some of the other things we've approved that we're waiting on anything for.
I wouldn't say waiting per se, but there's some outstanding projects going on the state level, reimbursement level.
And we
Harbor
can put it-
Road Bridge, I mean,
Right, right.
Mare Street, yep.
Can we get an update on those items for our next quarterly review meeting, please?
I think-
If it's available sooner, that's great, but...
Mr. Chair, as you and I discussed, this has been an on-again, off-again item. I think
Right.
you and I have talked
Right.
over the years where we were jointly on the Board of Finance, that this is something we ought to have on every quarterly review. So I would suggest, as we look at this item, perhaps there's a standing agenda for
Yep.
quarterly reviews to make sure that all the items that we want to look at every quarter come up, so it's not that we're going back over this every time.
Yep.
And then between now and next quarter, perhaps we can run by some formats for the report, so that, I know we had provided this report 4 years ago,
At least.
somewhere in the not-too-distant past, we had a report, a format that seemed to make sense for the Board of Finance to look at. And we'll see if we can take up that format. If not, I think we can recreate it.
Great.
And that should handle school projects, as well as the bridges, the Metro Center, and any other projects that we come up for reimbursement on.
Yeah, I just wanted to make sure, I saw it on the schools here, and I just want to make sure we didn't forget those as well. So, thank you for the explanation. Any other questions? Mrs. Leclerc?
I just wanted to ask, how come the 126,000 we talked about earlier isn't on this list? Doesn't that belong here to track those?
Yeah, but they're not current projects, they're not active projects. I believe these are basically the ones that we're still awaiting audit on. Those were all older projects that we're just awaiting receipts from. I mean, I'm talking old projects.
But isn't that part of our purpose?
Yeah, we need to know all of them.
Yeah, that will be part of the town.
The town side one.
Backside.
So is what you're saying it's not on here because that's more of a town one?
Yeah, this, in my opinion, was the ones that we're still waiting on the state. These are active projects that haven't been
On the
audited
schools,
or on the
yeah.
school side.
Basically, we need a listing of any money that the state owes us related to any project that they still owe us money on,
Excluding grants.
excluding grants. It's specific to projects. Okay. Any other questions, comments, concerns? All right, seeing none, I think we're done with this item. Mr. Cullen's already left. Goodbye. All right.
10 yards
We're going to go back to item number 4. Do I have a quick motion to go into private executive session? I'll go with Mr. Stone. I'll second by Mrs. Alban. All in favor? Opposed? Abstentions? Okay, we're going to go into private executive session. Out back for a few minutes.
What documents should we bring with us, if any?
You can't bring it. All right. Can I have a motion to come back from executive session? Mr. DeWitt? Mary has a second. All in favor?
Aye.
Opposed, abstentions, we're back in public session, so we're going to move forward. Let's quickly go through the town's financial position versus budget as of Q1. Did I miss it? Did we not get our standard write-up? Is it? I must have missed it, I'm sorry. Mr. Mayor, Mrs. Gardner, or Mrs. Bossy, do you want to run us down any big issues here in the first quarter?
Okay, gentlemen.
And ladies.
And ladies. And ladies, yes. All right. Going in, you basically have 1, 2, 3, 4, 5, 6 documents from one page to many pages for this portion, for this agenda item. The first one I'd like to talk about is, or do you want to put them all in order now?
Yeah, let's just
Or
go
you want to,
through.
or you want to look, okay. The first one will be the fiscal year material variances as of September, fiscal year 13 material variances, a one-pager as of September 30, 2012.
Incredibly, I have none.
Okay.
It's basically 8 line items, or 6 or 7. All right. We will go from there to the bond premium. schedule the proposed utilization of bond premium. Then we'll go from there to the budget monitoring report, which will be used in conjunction with the two-page highlights item. And then you have the flexible period reports for the revenues and the expenditures, which I'm sure you've all read religiously and have multiple questions that Ms. Gardner and Ms. Bossy would be happy to answer.
All right. Let's go to the reports. Mr. DeWitt, do you have some questions?
Can I do a little?
Sorry, were you going to run through them?
Yeah, I want to
Okay,
talk a
go
little
ahead.
bit first, if I may.
I thought you were asking for our questions. Go ahead.
No, yes, soon. I just wanted to make one or two comments. Firstly is, we just kind of went through 12, and one of the things that happened in 12, we had this evolution of what the fund balance was going to be, the surplus deficit, where it went from we were concerned, we had to have a tax sale, to 500,000, to 1.5 million, to 3.8 million. And I bring that up because, though I think this is an important exercise, I think we need to understand that this is not an exact science. And though we want to do our best to identify and try to attempt to determine where we are, and we need to do that department by department, I think the last year's experience kind of tells us and guides us that we can't be dependent upon these numbers absolutely. We need to take them, in context. The second thing I want to say is because of the policy, because of the processes, if you will, and the closing procedures, one of the things I found interesting, went through with this, some of these reports, and it's more effective, has more impact the first quarter than the remaining quarter is, some of the accounts, when this report is prepared for this meeting, are not fully closed for the month's activity. So in some cases, we're comparing last year, 3 months, to this year, 2 months. So if you want to avoid that, if you want to do 3 versus 3, 6 versus 6, 9 versus 9, until or unless at some time things can change in the finance department, which I'm not saying they can't, I'm just saying, I have not looked at that, but you'd have to have this meeting a month later if you want to do apples to apples.
Or speed up the close.
Or speed up the close, which I can't address at this point. Okay? So, but you're absolutely right. So with that as an intro, what I've tried to do, what you have on this first page, is identify those things which are of a magnitude and large enough, and that we have enough knowledge about that there's some degree of certainty as opposed to guesstimation. So we actually have 6 of those listed, if you will. On the revenue side, we have the property or payments in lieu of taxes. That is what the state pays the town for property taxes the town does not realize because of the nonprofit organizations, universities, et cetera, who have property in our town. That was budgeted at $2.145 million. We received the check. The check is $2.501085. So there is a positive $356,000 variance that is realized. We don't get another check. That's the only check. That's a done deal. The second item is the Video Competition Trust Grant. I really don't know much or anything about this, other than it is a grant that we get. It's a one-time payment. It was budgeted at $129,000 approximately. We have received the check. The check is for $259,000, so there's a positive variance there of $130,000. Municipal revenue share is a new line item. We will, it was not budgeted. I don't know when it entered the state budget, so I don't know why it was not budgeted. I have no information on that. But it was not budgeted. We have received 2 checks. The total of 2 checks is $412,000, so we have a $412,000. The first check was large, like $380. The second check was $30, something like that. We anticipate receiving 4 more checks. That's our understanding at this point, that it's every other month. I get you could make the assumption that the rest are going to be the smaller amounts or maybe even decreasing amounts. I don't really know. I have not talked to anyone at the state. The third item, fourth item, in lieu of manufacturer's equipment, was budgeted, but it was discontinued by the state. You could say it was folded into the municipal revenue share. So that is a negative $83,000 that's realized. The bond premium was budgeted at $320,000. We realized bond premium on the sale of $2,971,000, so we have a positive variance there of $2.651 million. On the expenditure side, unemployment compensation was very high last year. That expectation got carried forward in the budget. The budget is $375,000. First 3 months, I'm not even positive that's 3 months. Ms. Gardner, it's only 2 months, thank you. One of the accounts is not closed. The first 2 months was $28,000, so you have a positive variance, again, on the 2 to 3 versus 3 months close of $175,000. Excuse me, the variance right now of $346,000, a difference. Looking at this account and projecting out, I would anticipate approximately $175,000 savings in this account. That, unlike the ones above, unlike 4 of the 5 above, is an estimate, as opposed to a certainty. Interest and debt service, the difference in the projected interest on the refi and the actual interest, it's $129,000 more than anticipated. So our debt service, payments this year will be $8,396,000 instead of $8,267,000 for a negative variance of $129,000. With that said, are there any questions on this page?
Mr. Walsh?
Can you just explain this municipal revenue share? Is this, Mike?
This was,
Chairman, if you can.
yeah.
Sorry about that, I should have gone through.
No, don't worry about it. Please.
And I'll ask Ms. Gardner to fill in if I miss anything here. This is part of the governor's new revenue sharing program. So I was probably a bit more fluent on this about 9 months ago when we were looking forward to this, and we're getting several iterations back from Hartford in terms of here's how it might play out, here's some other ways it might play out. It is in replacement of the in lieu of manufacturer's equipment fund. So in this case, there are a number of components that go into that, and Ms. Gardner, I may ask you for the specifics on that one. We did not budget for it because coming in, we couldn't get a good handle on exactly what it was going to mean to Fairfield. It was like, and we were going back and forth with the state, and they just would not commit to anything. We'd get an estimate 1 month, and then it was like, and the other issue, would it actually survive in the state budget for us to see it? So it's a brand-new program. We weren't 100% confident it was going to last through the budget, and they wouldn't give us an estimated number, so we stayed away from it.
So is this the increase in the tax, sales tax?
Yes.
Where
It's
they
our
talked
share.
about that small portion we'd share with you, but we won't tell you what we're going to share with you, and some cities might get more, and some other towns might get less.
Correct.
Yeah, we discussed this during our budget process. We also discussed the Video Competition Trust, which, as I recall, was new last year.
A year ago.
Wasn't it?
This is the second year
Right,
that we've
exactly.
had an upside to that.
Right, and didn't we budget very similar to what we got last year? We didn't budget any more, correct?
Yeah, we tried to go very conservative because we weren't quite sure.
Right.
Again, the guidelines from the state are not very good in terms of what we can expect, so we've tried to be very conservative in that regard.
Those two aren't surprising me as much, only because we didn't have any information on them, any better information. I am a little surprised at the pilot program that went up by so much. What happened there?
I'm not 100% sure. I think we were down in that last year, if I remember.
Yeah.
We budgeted current year actual that we received in fiscal 12.
What changed that spiked it up in our benefit this year?
Well, I just know that we were going off the governor's budget, and the final state budget wasn't set until June after our budget was set.
You know, they might have been paying us back for last year. If I remember correctly, one of the pleasant surprises about this time last year is we got our pilot payment, and it was $200,000 short of what we had budgeted and expected. So to that degree, over a two-year average, we're on track, but...
But do they provide any backup for how they come up with their calculations so you could actually understand it?
I'm going to...
No, because it's divided up between the universities and the hospitals, and Yale is just developing their research facility where Miles Pharmaceuticals had been in West Haven. And we actually got a decrease in the distribution among those institutions throughout the state as a result of that. So I'm not quite sure why this year we received more.
It's been a moving target without a lot of solid guidelines. So we have tried to be conservative in doing that.
Any other questions on those items? Yeah, please, Mr. Stone.
On the expenditures, the unemployment comp, are you estimating the unemployment from the seasonal workers in there, in that figure?
Yes, the biggest...
Golf course and stuff, yeah.
Yeah. The town side of that, as I understand it, is pretty consistent.
Okay.
It was, we laid off a number of teachers 2 years ago.
Mhm.
And so we're seeing the impact of that. That was a big jump up last year because we didn't anticipate that. We anticipated it this year, but we've now seen some of those people come off the rolls and go back to work. So we're kind of tracking our month-to-month number. You saw in the last 6 months of last year a trend towards positive experience on that.
Well, also, people have just run out. It's not even that they're getting new jobs, it's just they're running out of benefits, too.
Yeah, they're still on the 99 weeks now through 12/31, I think, unless that dropped off. But I'm not sure.
Yeah.
I'm not sure.
There were 5 different programs, 4 of them are gone.
Right. The, one other question on the revenue side, for bond premium, and I think Mrs. Leclerc and I had the same question, which is, can we get a clarification from our auditors on the proper accounting for that? The difference between municipal and,
You're going to see it on your next sheet. There's a lot of rules surrounding this. You want to speak to that?
One other, well, no, you can go
Where-
ahead, but just one other thing. Earlier today, we talked about the discontinued funds account from 2012. Was $145,000. That was an account I thought about putting on here, actually. That's in the budget, 2 line items. One is 70, that's the land sales, property sales is at 70. The other discontinued funds is at 75. We did sell a piece of land for $18,000, but that's the total activity in that account.
all right, we can follow up on the bond premium thing separately for,
I'm sorry, the next page is the bond premium. But basically, the rules relating to the bond premium are,
where are they?
it needs to be segregated. Oh, it's
Yep.
the page proposed, it's one pager,
Yep,
very, 4 or 5 line items?
Yep.
1, 2, 3, 4.
It's like this.
pretty short.
Take a look at that later.
Yeah, all right.
You don't need to make a note of it. We're good.
Yeah, go ahead, Caleb. Or Bob, whoever.
Yes. Bond premium 2.9, offset by the 320 and the 129, leaves the balance available for 2522. The rules and regulations, which we will clarify, there's two sets of rules and regulations. There's the accounting set, and then there's the IRS set.
Right.
The IRS set is based upon the arbitrage concept. You can't borrow money, arbitrage, et cetera, so you have to track this, you have to put it in its own separate account, and make sure that the funds that come out of that account are used to pay down debt service, et cetera, et cetera. You need to do that within a 3-year period of time. So we have basically $2.5 million to use against debt service for 3 years. It is preferred that you use it early, but not required in the 3-year period. They like to see it the earlier the better.
Yeah, so essentially pay it down and
Yes, it
offset it.
does not have to be paid against the specific issue. It is available to be paid against any outstanding debt issues.
Okay.
And I've documented the request for a,
Yeah, I just want to make sure.
I'd like to call it a confirmation.
Yeah, there you go.
We hope.
Yeah.
I hope.
Okay. All right. Any other questions on these items? Anyone? Broader, we have I just want to speed us along if I can. We have the highlights here for the monitoring. Questions, comments, concerns on that? And Mrs. Gardner, thank you for providing it. I failed to note it in my first pass-through. Any questions or comments on this? Really quick, prior year levy, the collection rate is much higher than previous year. Does that have to do, once again, with the tax sale? Is that what that is? Is it also part of does this reflect the reclassification of the revenue that was collected in July and August?
Wait a second. You can't account for the tax sale in both calendar years.
That's what I'm asking.
So the answer is no.
Okay.
We
so-
already said, we already talked about it for 12.
No, but you've said you're moving it by $1 million.
But
on
this is
Senate Ave.
pre-moved.
It's moved back to
This-
12.
Okay, so what accounts for,
the prior
that's exactly my point. What accounts for this variance then?
I have absolutely no idea.
Can we follow up on that one? I'll take that as a yes. Thanks. Any other questions? That's what I call negative assurance.
There you go.
All right, what else? Any others on that? Yeah, do you want to go through that, Chris? Please go right ahead. We're back into the munis reports now. Mr. DeWitt is doing his.
All right. As usual, transfers and adjustments. It seems an inordinately high amount of additions to fees and professional services. Conservation, 5, 6, 7 budgets had fees and professional services plussed up. I'm kind of curious why that happened.
I'd like to make a comment before we answer these questions. Actually, I just thought about this.
I'm sorry?
I'd like to make a comment before we answer your questions.
Sure.
This is the first time I've heard your question from this chair. Okay? Every quarterly review, you have a lot of questions based upon your review of this report, and that's a good thing. It would be really helpful if you submitted those questions early so we could have answers for everybody.
Okay. You're assuming I looked at it before tonight?
Well,
And you're assuming, and you're assuming he got it before Friday evening at 7 o'clock.
Good point.
he had the whole weekend.
I was at a softball
No, I'm
tournament
just
all
saying,
weekend.
because I know, I remember, you ask many questions, and that's a good thing, but there's frequently, we don't have the answers for those questions, and you always have to come back at the next meeting, so I'm just saying it might help.
That's not.
Chris, ask
Is there a way to speed up getting the information so that we'd have more time? Under your scenario, it would be nice to have that stuff maybe a week beforehand. So are
I
you
totally
prepared to
agree.
do that?
We couldn't have this time, but we can certainly, and I have no idea.
You've no idea? Okay.
I
Well,
know that we couldn't
I
have this
think
time.
that question has
I
to
don't-
be answered before we answer
Right.
the other
No,
question.
You got it. We'll look at that.
Yeah.
Yeah.
I
No,
think
no, I
some of us,
understand.
I know I'd be willing to work with you, but I need you to work with me.
No, I hear you, totally and absolutely. I think that's a reasonable, absolutely reasonable comment, totally.
No.
Mr. DeWitt, do you have some questions you want to?
I thought I had one already out. I guess I'm
Yeah,
not
you-
getting an answer.
You do. No, no, no. The
Oh.
transfers and the adjustments
Yes,
are
please.
from Schedules A through E that you guys approved for the reappropriations and the encumbrances coming into 13 from 12.
Okay, I
You-
believe you. I don't remember.
know what I mean?
I do remember.
The open
I don't remember
POs
them
coming
all going to
forward.
fees and professional
Well, no,
services,
they
but.
don't all, but they're basically open POs that were carried forward, and there was about 5 reappropriation items.
So all the transfers and adjustments came from the,
From fiscal 12
okay.
forward.
And maybe I didn't pay enough attention to that, because the one that I really was questioning, well, this capital, I remember the capital change. There was a reinstatement of a line item that we zeroed out. Contracted property services for human services.
That's part of the bus. The 30,000?
Oh, the 30,000. That might be it.
All set, Mr. DeWitt?
I think I am.
Mrs. Leclerc,
Thank
I
you.
see you furiously flipping pages. You have
Okay,
anything?
yeah, I'm okay.
Okay, anybody else on this side of the aisle?
Actually, maybe I don't want to get it out earlier, because then there'll be more
I was
questions.
just going to say, that was good. That was a good answer for, just off the
Yeah,
cuff
the
there.
other
Let up a load.
Actually, this is, quite frankly, the speed of this is pretty common for a first quarter one. So thank you. Any other questions? Mrs. Gardner, thanks for the write-up.
Thank you, Lynn.
Appreciate it. Briefly, Mr. Tetra, if we can move on to number 7, which is to hear the financial update on the Metro Center. And I think we can go through this. I'm assuming everyone was able to read through the PowerPoint,
I couldn't print it out.
and I know this was a topic of discussion at the RTM.
I'm good.
He might be passing something out. Thank you. Okay, same. Thank you, Mr. Tetro. Please go
What I
right
just
ahead.
passed out is something that's essentially the same with a couple extra slides that was modified for the RTM presentation last night, and I thought you would appreciate the benefit of looking at those slides. All right. Simply put, the bottom line for the project at this point, and Mark Barnhart was able to be at the RTM presentation last night and give the update. He wasn't able to make it tonight, so I'm going to pinch hit for him. The project's done. We are still doing paperwork. We're still doing punch list items as we step through this, and you'll see that reflected in the numbers as we go through. The paperwork, as you'll hear, is taking much longer than we expected. But from the top, if you'll flip the page to slide 3, at the top, it's the Fairfield Metro Center, the expense summary in millions. You can see the expended to date is $40.5 million. We have .3 or $300,000 left to go. $100,000 of that is still left in contingency. The balance is applied in inspection and engineering. What's happening with the process now is as we submit paperwork to DOT, they are sending it back. We then have to have our inspection team review it, make the corrections, and then send it back to them. And that's kind of the cycle we're in. The total project cost is still on track for $40,800,000. Next slide, item 4, is intersection improvements. Same format. We have about $100,000 to go on that, and that is that project was finished almost a year ago, and is again, we're in the paperwork phase. We've gotten most of that through, but not quite all. Just to put that in perspective, we sat down with DOT and asked them to speed up the process and give us a firm date on when we could count on getting the paperwork back from the Metro Center so we could move through with this quicker. They gave us a date for the intersection project, which is about a $4 million project, the Metro Center being $40 million. Their date on when we'd get through the paperwork for the intersection project was May of 2013. We are going back to see if we can improve on that date with them and get a little bit more cooperation on that side, but this part of the process is moving much slower than we anticipated. Slide 5 is just the combined expense slide. So you can see for the total project, we've spent just under $45 million, have about $400,000 to go, and we'll still looking to be on track to finish at $45.1 million. And again, I don't know how to emphasize this enough. The big qualifier, since we still don't have a date on when we're going to finish the paperwork on the Metro Center in terms of the DOT reviews, if we can get the paperwork done on an all a reasonable basis, we should be fine. If it continues to stretch out and stretch out and stretch out and stretch out, these numbers get very thin in terms of us finishing where we plan to be. Next up, looking at project revenues. We've got two slides here, two different cuts at kind of the same picture. Revenues by source and project. If you look down the left-hand column, you'll see the sources are federal, state DOT, state DECD, the town, private, conservation bond, and total. Now, these revenue sources are for the life of the project. You can see how they break out between the Metro Center and the intersection and what the totals are. If you move forward to the next slide, Mr. Chair, this is where a slide I mentioned about talking about the reimbursement schedule.
Yep.
If you look at this, by source, federal, state, DOT, DECD, town, private, conservation, and total, we have received to date $36.8 million. Additional expected, 8.3. So that's kind of we are tracking that quite literally every week. We've had to go up to DOT and shake the tree a little bit to keep these things moving along. These numbers do include, and let me try and address 2 points here. One, we had talked about being reimbursed by up to $3 million for the station and the parking lot work that we were doing. It looks like we're going to come in around 2.6, 2.7 for that number. Right. We had talked about there being an extra grant out there on the intersection side to the tune of $400,000. That $400,000 is included in these numbers. One of the reasons we're...
Is that under state DOT, Mike? Mr. Verselek?
I am going to say yes. It might be split a little bit between there and federal, but I believe the answer is yes to that.
Okay, thank you.
The item there is we actually have to get through the paperwork far enough along with DOT for the intersection, to turn around and then apply for the grant. That what we've been told by DOT, it's like they said, come back to us with a final number so we only have to fill out our paperwork once. All right, so that's kind of what we're managing now. If you go to the construction site, the dirt is gone, the mounds are gone, the equipment's gone, the construction trailers are gone. We do have some punch list work to do on the landscaping. Some trees had to be replanted, some grass seed had to be replanted, that type of thing.
Mr. Bolito?
Thank you, Mr. Chairman. There's just one thing I'm not understanding. Where on the revenue summary, it says town is the source, received to date 6 million, expected additional 4.4. Essentially, that's expenditures because we're not paying ourselves, right?
Well,
I'm just not following that.
Okay. In essence, we kind of are.
Uh-huh.
We've been authorized to go out and bond another $7.5 million.
Okay.
Because we got 2.6 to 2.7 million back from the state.
Right.
We get another $400,000 back in anticipation of that grant.
Uh-huh.
That leaves us with 4.4 to go out and bond.
Okay.
So when you look at it, we were potentially liable for $13.5 million last August when we talked. It's down to 10.4 based on the extra reimbursement we got from the state and the $400,000 we hope to get from DOT. Planning to get from DOT at this point.
So in essence, what you're counting as revenue is the anticipation of issuing a bond?
Correct.
All right. That's what I needed to know. Thank you.
That was just, we wanted to show it in here. That's
No, I got it. I just want to make sure I understood it. Thank you.
Okay.
The other two issues that came up the other night that, just to cover in advance, there were two lawsuits in the spring from Guerrero and Company. To give you a brief update on those. One was for for 5 million change, one was for about 250,000. Forgive me for using round numbers. The $250,000 lawsuit related to the intersection improvements. We basically have finished the projects, paid off the accounts, and that lawsuit has gone away, or has been agreed to go away. If you check the websites, judicial websites, you will still see it out there. It has not been withdrawn. We have not paid our final check to Guerrero and Company. We have agreed on everything. But until we get the lien waiver from the subcontractors, a few other pieces of documentation, we're not giving them the check, including we want the withdrawal of the lawsuit. So that will stay open, if you will, until that point, but it has been settled. With respect to the larger lawsuit, also with Guerrero, that one concerning the Metro Center, 5 million change. Structurally, that was probably filed in advance. We're supposed to go through mediation, which we in fact did take them back through mediation. They filed the lawsuit primarily as a negotiating tactic. What happens in this, and let me just use an example of one line item on a construction project. We bid unit quantity prices. We bid quantities and we bid unit prices. What happens is the following. The way the contract works is that if any of our quantities exceed the bid quantity by more than 25%, we, as well as Guerrero, have the opportunity to go back and renegotiate the unit cost. So let me, again, just step through the math so we can see how that works. If we, and I hope I don't have to remind everybody that our quantities were somewhat off throughout this whole project. So if we put down 8,000 cubic yards for a line item, and we came up against 66,000 cubic yards, we'd have the 8,000 was the original bid quantity. 25% more gets it up to 10,000. That 10,000 is locked in on what the unit cost was in the bid, period. However, the balance of the 56,000 is subject to negotiation if the contractor can prove the prices went up. Or in our case, if we could prove the prices went down. So as part of that, we ended up agreeing on about $500,000 of additional charges to Guerrero as part of their unit cost increases over that time. That $500,000 fits within the budget and is included in the numbers that I just showed you.
Bottom line, so what did the Metro station cost the town? Is it the 10.4? Is that the final figure?
That's the best estimate as of today, correct.
Mr. Walsh?
Mike, is there anything on here that shows where we stand with the money that's been appropriated, that the town's appropriated? How close are we to being at the total amount of the appropriation?
We're within $400,000. If I can turn back to slide number 5, which shows the combined projects
Yes.
for both the intersection and the center.
Yep.
Estimated cost to complete, $400,000.
And that's still within that's the total amount we have left appropriated by the budget,
Correct.
as through last August when we increased the amount.
That's the 45.1 number. If you go back, you can
Yep.
tie that out to,
So we have $400,000 left before we need a further appropriation, God forbid.
correct.
Okay.
That's what I meant when I said it was thin at
Okay.
this point.
Yep.
And now theoretically, it's all paperwork.
Sure.
But if you'd asked me 6 months ago, I would have suggested we'd be done by now.
Okay. And my other follow-up question to that is that Mr. Stanky's now on the job, right? I've been hearing rumors that he's been out there a lot and ordering new testing and talking to our environmental consultant, which I presume that talk's not cheap, if he's asking him questions and they bill us. Is there a potential that that could push us over the top?
Yeah, I
The
don't
stuff that
think...
the work that Mr. Stanky's currently doing on the job.
To the best of my knowledge and best of our discussions right now, and we're still meeting every week on this. We haven't stopped doing that throughout this process. To the best of his discussions at this point haven't generated anything, and it was our best effort to make sure that we've addressed everything that's been brought up to this point. So our goal was to do the job, and if the Conservation Commission identifies anything that new or different that we have to do, we'll have to go back and do it.
Okay. Are you working with that department and monitoring what they're requesting, or is he can just he can just start asking them questions and running our bill at any time he wants?
He can't generate, and yes, we have been working closely on that to make sure that there are no additional costs incurred without us understanding what those are. So, Mr. Stanky, anything Mr. Stanky needs, and there are several things he does need, and we have provided those, but those go through Mark Barnhart directly so we can manage that. Any official requests would come from the Conservation Commission down to us, and would do whatever they want.
Okay, and you'll update us if there's any changes that you think would put us over the budgeted amount?
Oh, yes. I mean,
it seems very thin now. I mean, we're down to $400,000. So I just want to make sure that someone's keeping an eye, and also now all these bills aren't going to come in and push us over the top.
We're meeting every week. The big surprises should be done in terms of all the dirt's off-site. That's just gone. We're working on punch list items from Redness and Mead. We're working on some punch list. We've given Guerrero punch list items to finish up, like I mentioned, some of the landscaping. So we're down to that level of work. So it's our best estimate right now with what we know that we should be able to do it. But you're right, if things change, we would come right back, because we only have $400,000 to spend. And of that, we've allocated most of it to specific tasks. There's $100,000 left in what I'd call pure contingency at the moment. So it's very thin.
Okay, so you think that there's another, out of the 400, 300 may be spent, and there's
Not
100,000?
spent,
Okay.
allocated to budgeted tasks. And I'm going to pick an example, and please don't hold me to this because I'm not using actual numbers. But of that 300,000, we might have said, not Guerrero, but our LEA, Lorera, is going to do $50,000 more in inspection work for us.
Okay. All right, what about this lawsuit? Because I understand that the smaller of the lawsuits is completed.
It has not been withdrawn yet, but it has been settled.
You've negotiated a settlement on it.
Yes.
That's not been completed, but you have an agreement on how to settle that case.
We have agreements on both in writing and signed.
Do you have an agreement on the other lawsuit, the larger one?
Correct.
You do have one on that one?
Yes.
Okay, the same thing, and it'll fit within this budget?
Yes.
Okay.
It's included in these numbers. And again, if you look, it's not withdrawn yet,
Sure.
and we're not handing over the retainage check until we get the additional paperwork. There's some easement paperwork, I think the surveys are in. There's some smaller amount of paperwork items we need from them to close that out.
Okay, thank you.
Anyone else? Yep. Mrs. LaCroix.
The .8 conservation bond, is that actually in our possession? It just hasn't been turned over to the town, or?
Well, assuming you think the Conservation Commission is not the town,
Okay, they have the bond, okay.
we're a town with many pockets. That's in
Okay.
another pocket. We will formally
This hasn't
apply,
been released.
we will formally apply to the Conservation Commission to demonstrate that we have completed all the work required under the town inland wetlands permit, at which point that money will be freed up and will apply to the project.
Okay.
Mr. Brown.
Thank you. So, after all this, do we know how much Eustis Metro Center is getting at this point? The utilization, commuters, 1,400 parking spaces, how much it's...
I don't have those exact numbers. I will tell you anecdotally, our waiting lists are way down. Anecdotally, people are parking on it and enjoying the station. Anecdotally, I even heard this summer the highways were less busy. All right? I have no stats to back that up, by the way.
Waiting list is way down on the other train.
On the down
Fairfield
station,
Center.
yes.
Yeah. But what is it, there's 1,400 spaces?
Yes, and what happens as we do downtown, the state, I don't think, is overbooked yet, but they're starting to overbook
Okay.
on that. So they're working with us to get more people off of our waiting list and over to their station.
Mr. Polito?
Thank you. Anecdotally, my office is right up the street from the Metro Center. I drive by it probably every day, and it's half full every day. I know we've had a private conversation about that, but just for the public record, what is driving the fact that a station that was supposed to have such high demand is half full?
That is the normal commuter pattern. If you look at what we do in downtown, the downtown Fairfield Station. Downtown Fairfield Station is the second busiest station on the Metro North Line.
Right.
All right? We have approximately 1,100 parking spaces there. we sell over 1,900 permits. So we double book.
Right. And the state has not double booked.
The state has not
Metro
double
Center.
booked yet. To their credit, they wanted to make sure everything went smoothly, so they were very cautious. They didn't even book 100% right off the bat. They slowly moved that up.
Right.
So I expect once you see that half-full parking lot for enough time, they will start to double book because they will start to feel safer with that.
So basically, you have people who have permits who just aren't parking there for whatever reason, correct?
Well, they're probably not using it every day.
Right.
And that's counterintuitive to me. I thought my stereotype person using it was the 5-day-a-week commuter,
Yeah,
and you
that's
go
what I
in
would've
every
thought.
day, and so how dare you double book? Nobody's going to find a place to park. That hasn't been the case. That's not how it proves out.
Okay, thank you.
At what point is the state going to be turning over the 200 to 300 parking spaces on the New Haven bound side of the tracks?
We're currently, I believe, in the final stages of signing off, and I think we've agreed on the quantity that we need, and I think that we have some i's to dot and t's to cross on the actual agreement.
Have you agreed on a number, and can you release that at this point, or no?
Yes, I can release it. I'm just trying to see if I can remember it. Mr. Mayor, 114, am I thinking? It's safer for me to get it to you. It was in the range of what we were talking about. 114, 117 in that range.
Okay. I guess I'll talk to you offline about this, because I thought it was supposed to be 300, and then there were some spots that were short at the other station, and I didn't know it was going to go down to closer to 100.
Yeah, there were significant number of spots short at the other station. But yes, we can do the math, and that's been, obviously, we closed on the station last December 5th. We have been negotiating since then.
Okay. Thank you.
Any other questions, comments on this? Mr. Tetro, thank you for the update on the Metro Center. We're going to move to item number 8 on the agenda. Due to the lateness of the hour, I've already spoken with Mr. DeWitt. There's a fairly lengthy report on not-for-profit committee recommendations that I'd like to punt to the next meeting, actually to the meeting on our first meeting in November. Okay, on that one. So if we can put that on that. I don't know, does anybody have any objection to that, to moving that along? So put that, due to the lateness of the hour, I just think that's prudent. The other items were just 3 updates. Oh, yes, Linda.
I just have a question.
Sure.
I am sending out the budget packages now,
Yeah.
and if you're going to wait till November and make any changes, are there any changes I can now incorporate?
Let's,
I don't mean to hold you to the...
yeah.
Have you made the changes we originally requested? Just quick background on one of our recommendations that we forwarded to Ms. Gardner in advance was a new requirement to ask for some very specific data from all the not-for-profit entities, and we'd asked that if we could enact that in early October when Linda was sending out the packages, rather than wait till the end of October, now November, right?
I'd say that's within the administration's purview.
I can do that.
Nothing else has changed. Yeah. Thank you. Thank you for asking.
Sure, thank you for bringing that to our attention. All right, so we'll have the crux of that conversation at our next meeting. Then we had 3 other items just on our committee reports. Briefly, the Budget Subcommittee. We're getting to that time of year again, and I would ask that that committee, if it hasn't already, that you start to meet and start to plan for the budget process.
Absolutely, and we'll work in conjunction with Mr. Mayor, Ms. Bossi, Ms. Gardner to get the schedule down for the budget season well in advance.
Great, so if you could report back at a future meeting, that'd be great.
And the cookies. Well, that's a separate sub-column.
Yeah. All right. I referred to this item as the Cash Management Subcommittee. This was really, Mr. Brockfeld, this was the Investment Committee. What are next steps with that, or have you?
Well, I'll just, the Cash Management Committee, which, Tom, you were on with
Yeah.
me, and who, was it Mary? It was Jim. Jim, I'm sorry, I apologize, Jim. Yeah. Jim made some very important points during the meeting. No. Wow. Very, he knows I love him. The really important item in the town, we cried bloody murder about it about 2 years ago. We took some steps to make some improvements. then we had a change in administration, a change in CFO, we had a train station, and some other things that I think took up a lot of people's time. I would just allow, if Mr. Mayor wants to address in any way the steps he's taking on this to move it forward. I know we're short on time, but if you wanted to give a quick synopsis, and then I think we're definitely due for another meeting among ourselves. So we'll have a lot more to say, hopefully, in the next couple of meetings. But I know Bob's been working on it to some extent.
Right, thank you. And I'm not really sure what the charge of that committee is, but I did see the agenda item, and so I thought this would be a good opportunity to bring you guys up to date on what we are doing. Mike did ask me, as I took over CFO, to look at the short-term investment strategy of the town. And as an intro, I'd like to say I come to this with some experience as a CFO of a New York Stock Exchange company, Sierra Health Services, and as the CEO and chair of Independence Financial Holding Company, which is the holding company for Madison National Life Insurance Company and Standard Life Insurance Company, New York. I was the director of the Treasury function as part of my capacity. A good short-term cash management strategy requires an understanding of one's cash position, which requires well-developed cash flow projections. It requires a comprehensive investment management reporting system. It requires a cash management investment policy, and it requires professional investment management resource skills that include experience and time. The town has none of these, actually. The town does not prepare cash flow projections. The town does not have a written cash management investment policy. The town does not have an investment reporting system. Additionally, over the last 39 months, the town had an average uninvested cash balance of approximately $24 million. The town's choices moving forward are the following three. Continue to manage in-house, depending upon input from retail brokers. Acquire a Bloomberg or similar system and execute our trades through the retail or institutional brokers who had list their trades, their securities on the system, execute the trades through them, and then transfer the securities to one of our retail accounts, or thirdly, outsource our short-term cash management function. A competent management of short-term cash requires a good reporting system, as I indicated, an analytic ability to manage each trade and make the appropriate security selection decision, sector allocation decision, duration decision, yield curve positioning, guideline compliance, and issue-specific risk evaluation. The benefits of continuing in-house management to me are simply town control. The disadvantage, it requires acquisition and installation of a competent reporting system. It's subject to retail broker rates, not managed by a professional investment team. The benefits of outsourced reporting, investment reporting, compliance, credit research, performance reviews, institutional trading rates, which I'll talk about a little bit later, professional analysis and analysts and investment managers. The disadvantage to outside sourcing is you pay a fee. That fee is approximately 10 to 20 basis points. Looking at the spreads in the type of securities that we involved in, primarily municipal bonds, the spreads are, depending upon volume, $25,000 or less trades, 2% approximately. 25,000 to 100,000, 1.65%. 100,000 to a million, 0.87, and over a million, 0.51. So you can see by both moving to an institutional trading base as well as being able to participate in larger blocks of trades, we would save a lot of money on the investment spread of investment acquisitions. So that, I mentioned that because that basis point that we would pay in a fee would be offset by the combination of those two things, the reduction of the spread and the trading, institutional rate trading spreads rather than retail rate trading spreads. Efforts to date include, and Caitlin has been working with me on this, evaluation of Bloomberg. We obtained a proposal from Callan Associations for investment manager search. They wanted $45,000. We negotiated down at $30,000. Then we decided we could do it ourselves. We acquired a database of potential managers. We've culled the database to identify potential vendors. We've held interviews. We have initiated the development of cash flow projection policy and procedures. We've initiated development of investment management policy. Next steps, complete the interviews, prepare cash flow projections, complete the short-term cash investment policy, and make a recommendation on to the first selectman.
Thank you, Mr. Mayor. I would like to echo Mr. Brockfeld's comments. Let's get together and have a subcommittee meeting with Mr. Mayor, and we can certainly explain what our views were when we met last year. It sounds like there's been some progress on many of those, so thank you for that. We did specifically request that the town evaluate outside management of this for many of the reasons that you articulated, so I'm glad that's moving forward, as I'm sure you guys are. Mr. Brockfeld, anything else to comment on it?
No, I'm thrilled to hear that there's been a lot of progress that I didn't know about, and it's terrific. I'd say the only thing I'd put an exclamation point on is at the very beginning of your presentation, you pointed out that the town doesn't have a printed investment policy, which I think is absolutely job one.
And that's one of the things that we had asked for.
Right,
and-
and I just think that's job one,
Yeah.
because without that, it's just helter-skelter and random and
Right.
potentially dangerous, so.
Great. Mr. Brown, do you have anything to say on this? Mr. Stone?
When you were reading off everything, did you say 25 million was not invested or was invested, or?
I'm sorry. Our average cash balances for the combined investment and cash balances for the 3-year period, fiscal years 10, 11, and 12, our average cash balance, excuse me, not our average cash balance, our cash balance ranged, like in the high ranges would be the months that we
Collect cash, collect revenue.
had a bond issue,
Yeah.
was as
Right.
high as $91 million, and as low as maybe $45 million. Okay? Our average investment portfolio has been about $42 million, and our average uninvested cash has been $24 million.
Is that normal? I mean, I don't know. Is that how it should be, or?
I would think that with good cash flow projections, you would not have an average uninvested cash balance of $24 million.
That's what I was getting at. Okay.
Mr. Mayor, when you're saying that number, that money's not invested, we're earning zero interest on that money. That's what you're saying?
Yes, sir.
Okay, so we have anywhere from 24 to $90 million just sitting in a bank account for months?
No.
What are you saying?
I'm saying that, take a month, take a month. Did I bring that?
Jim, if I can interrupt, Bob, if I heard Bob right, there's like a $42 million base portfolio that seems to be constant, right? So that's partial answer to your question, that there is $42 million that's working, right?
Invested.
He's saying on average, there's 25 million that's not working. So I think that partially answers. So it's $25 million that with better cash flow projections, which we have not had in any way, shape, or form up till now, that could probably be invested more efficiently. We don't need that 25 million sitting there. We might only need 7 million sitting there to pay bills and so forth. And so the remaining 18, I'm making these numbers up now, the remaining 18 may be available for more efficient investing. And even in these very low rate environments, when you talk about 15 or 20 million dollars, even if you're earning 0.5% or 1%, that's real money. So the problem that we learned in our committee meetings was that since the town didn't have previously a very good handle on what the cash flows in and out were and what the demands were on the cash, there was a nervousness to commit a lot of it, or the majority of it, into investments. So it ended up sitting, like Bob mentioned, in essentially, in this interest rate environment, almost zero, right? Some other times you might get better, but. Zero.
Yeah,
So
right, yeah, almost zero, because some of it is in very liquid day-to-day money markets.
Right, but right now, those
Right,
are earning.
so it's not,
I guess that's the
the 25
question I
million is
have.
earning something, but it's
Some
earning a
of it
low
is
amount.
earning-
Yeah, I guess that's the question I had, because I thought the town had money market accounts where we can, if
some
we
of it
need
is.
money, if we need $6 million tomorrow, we can get it like that.
Right.
Correct.
But
Okay.
But functionally, right now, right this second, a money market account at a bank like People's is yielding probably like 0.02% or something like that.
It's at the most liquid you can get to earn
Exactly.
some interest rate,
Exactly,
because
but
you
it-
don't, because without the projections, you don't know when you're going to need it.
Precisely.
With better projections, you can say when you're going to need it, so you can get a little bit more
You
yield
might be able
on
to
the
commit it
investment.
out to 3 months or 6
We
months,
also have
whatever.
some things that were in other investments that were yielding more, but our concern, and we talked about this earlier tonight, was the fact that they were in mark-to-market securities that could have an adverse effect at the end of any given fiscal year on a fund balance. Right.
Yeah, and this is an example of why I would suggest outsourcing is the way to go. At least when you're outsourcing, you know, you have the experience of a Wells Capital Management or JP Morgan Chase or somebody that's measuring the yield curve, making adjustments, and making proactive decisions about whether or not you should take your mark-to-market, not,
Yeah.
et cetera,
Well,
et cetera.
Mr. Mayor, one of the, and we'll go back and we can have the committee meeting on this, one of the recommendations we did have coming out of this committee was to put an RFP together exactly for that purpose, for evaluating the outsourcing of the Treasury function, for that. Right.
I'll get in touch with Mr. Mayor and see if we can schedule, and with you guys, to see if we can schedule a appointment for a subcommittee meeting, and then we'll report back to the board, of course.
Thank you, Mr. Brockfeld. Thank you, Mr. Mayor. Mrs. Leclerc, anything on the audit subcommittee at this point?
We did meet on August 23rd, where they were just beginning to work on their audit, so we don't have real current information, but at that time, we just talked about the SAS 114, which is like a required meeting on internal controls and that type of thing.
And are you scheduled to meet again closer to the end of the audit?
We
correct?
will.
Okay.
In December, before they issue their report, we're supposed to review the report and also discuss how they should present it to the board.
Thank you, Mrs. Leclerc. I think that's it for committee reports. The last item we had is really the impact of the purchasing guideline changes implemented for the town and the Board of Ed in the prior fiscal year. This was an effort that we assigned Mr. DeWitt to work with the purchasing department on this. And Chris, I want to commend you on that. You heard from Dr. Tito earlier that through your efforts and that of Ms. Holland and the entire board, but mainly you guys, you were able to help them with their situation at Osborne Hill that wasn't otherwise possible. She also wrote and gave us a document that you have before you about the success that's been. So I just, since this was a specific initiative, we felt it important to just report back so that we could understand how it was going. So, Mr. DeWitt.
Thank you, Mr. Chairman. We approved the new purchasing policies October 4th of last year. And I was just happened to be going through my records, and I called Twig up and I said, wow, you know, how is this working out for us? I made 3 phone calls, one to Twig, one to Dr. Teitel, and one to our town librarian. And they were all in, you know, agreement that the policies are really working for us. So 5 minutes, this is a really good news story, but I really thought it was something you guys might want to hear because you lived, you lived through it with us. If you'll remember, before we revised the new policies, there were some very antiquated rules in place. We had, by law, by charter, I guess, or by our requirements, have local bids. We always had to have a local bid. The bid had to be placed in a local newspaper, and we got rid of that requirement. We're now in a global market. We increased our threshold for public bidding from $7,500 to $15,000, which has helped us quite a bit. We also implemented a process that I was adamant about, which was sole source. And I know it was a little, it wasn't quite understood by everyone here, but basically what sole source means is if you have a product that you know there's only one company, or you as a subject matter expert, being Dr. Tile or, you know, I'll say Rich White, as a public works guy, knows that there's this pump that only this company makes. So rather than going out to public bid for something we know is going to come down to a single company, we instituted this sole source process, which allows the subject matter expert to write a very simple form and say, I know that there's only one qualified source for this kind of part, or this kind of process, and allows there to be, frankly, a no-bid situation. Since October 4th of last year, we've had 9 waivers for sole source products, which have met and/or exceeded the $15,000 bid. It's not exclusive. 7 of them have been for the town department, 2 have been for schools. Simply put, bidding sole source goods represents non-value added work for the purchasing department. Twig's group or department has been shrunk, and they were having a hard time really keeping up with all the bids that they're working to. They've now got a manageable workload, and part of it is due to the fact that we have these sole source documents in place. Dr. Title brought up today about the what we would call waivers for emergency situations. It was enacted for Osborne Hill. He sent me a very nice note how his words, his estimation, it saved the town at least $150,000 because we actually got the work started early, started on time, and we actually got to open the school before we had to move any of the children to any alternate locations. One of the big things the town librarian and Dr. Title really stress is it is sometimes hard to quantify with a number how these policies are helping, but it's everyone agrees that what it does is it allows us to do things quicker, more efficiently, and with subject matter experts. Again, Dr. Title did throw some numbers at me. When we allow sole source, we allow consortium purchasing. I don't know if you know what that is, but basically a consortium means that we go to a group, consortium, and they do the work for us. They find the lowest bid, they scour the internet, they go out to everywhere in the world, and they say, okay, you know these books that you're looking for, Dave? Here's the cheapest place to get them. We guarantee it's the cheapest place. You give us the money, we go out. So far, we've got a couple examples. We've saved over $6,000 on our Microsoft school license agreement. We've saved $8,000 in paper, which is a really big number, believe it or not, if you knew the size. And overall, it appears, and these are rough numbers, I grant you, but depending on the product, the Board of Ed is seeing anywhere from a 10 to a 30% reduction in cost, again, depending on what the item is in the magnitude of it. So it's been a big help. Emergency waiver. Oh, there was also another 8 emergency waivers. There was also emergency waiver put in place for, and I think Dr. Title mentioned it today. We had a special needs child that we actually hired a teacher for. I think he talks about today. We also had to get out of district transportation for that student, and we did that with a sole source waiver in like a week. So it was really, really great. Bottom line is, a year later, we've got some positive results from the purchasing policies. I think they're working to our benefit. I think they're saving us a lot of time, and I think we can probably quantify in the next couple of months how much money. So it's a win-win. Oh, wow.
Thank you, Mr. DeWitt.
Please,
Mrs.
please,
LeClaire.
Mrs. Claire.
Okay, I'm very happy with what Chris just presented, but I also have a concern, and that was when the Board of Ed presented that they already spent over $700,000 on the emergency waiver. I think that's too high without boards reviewing the specifics of it. And so I kind of think we need a cap in there. So high enough that they can get started and get the process going, but that it shouldn't be going for this length of time without coming for a funding request.
Okay. Thank you, Mrs.
That-
LeClaire.
that's
That's what you were
just
talking
my-
to the Osborne Hill.
Yeah.
Right, but
So it-
specifically that one issue so far.
It's a valid point. I'll make a
Thank you,
note of
Mrs.
that.
LeClaire.
Chris, I want to thank you. I'm really impressed with that, to be honest with you. And unfortunately, the press is gone. I know it's on TV, but.
I did that
think-
on purpose. I put him like.
Yeah, I know. But, I mean, this is a really important thing that you did, and I think the town should know that, you know, the amount of money that you saved the town, and somehow get it out to the press, itemized. I don't care how we do it, but, you know, this is one of those good stories, and I think it should be noted. I really do. That was terrific.
Well, I appreciate that, but, you
That's
know,
real
certainly,
money.
certainly Twig and her group,
Well, whatever.
you know,
It's
yeah.
real money.
Yeah, I think you're right. It is real money.
It was a well-done effort, and I'm glad it's working out. We look forward to hearing more
Yeah,
about
it was really, I'll tell you, it was quite surprising, when I sent out the emails, just kind of a, hey, how's it working? Man, I mean, they came back with, it's fantastic. It wasn't even, wasn't even a hesitation, so.
Should probably start working for the state up in Hartford and
Hey,
help
you
them
never
a
know.
little bit.
Start in the
Gotta get the
invoicing
right-
department. All right.
As long as they don't move, okay.
Any other questions, comments, concerns from anyone? I want to thank everyone. This was a very lengthy evening. Yes, please.
It's really late. I
Yeah.
promise to be super brief. Can this go into the category of any other?
Yeah.
Quarterly meeting tonight. I know
Yeah.
it's a very busy meeting, but I thought we normally, at least on the schedule, have a report from the pension board at every quarterly meeting.
We actually do, and we didn't have that tonight. So can we put that on the schedule for January? Thank you.
Thank you.
Thank you. No, it is a very late evening. We've had a lot of meaty discussion here, sets us up well as we head into the budget process. I think we all know where we stand and the issues that confront us. Thank you for your time and your attention and your patience. I know Mr. Bolito would have had you out in an hour and a half. Do we have a motion to adjourn? Do we have a motion to adjourn? Mrs. Albin, do we have a second? Mr. Bolito, all in favor? Those opposed? We'll see you same time next week, guys.